right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Guys, Bitcoin is continuing to dump, continuing to break through levels of support, and we have made new lows overnight, coming down to pretty much $81,000. And I do expect this dump to continue with small bounces along the way, but I do expect this dump to continue here. We have invalidated some bullish divergences on many of the intermediate time frames, and it's just not looking good. It looks like the impulse to the downside is going to continue. We do have a new level of support that I just laid out. You can see here on the charts coming up here. And I do think we could continue in the downtrend from 107K until we get to about 78K, of course, with some small bounces along the way. But yeah, Bitcoin is continuing to dump here, guys. So welcome in, everybody. Welcome in, Jaw Fuel. Welcome in, Crypto Wanderer. Yeshwant, much love back to you as well. Ryzen BTC, welcome in. R Pink or DJ Eep, Threep. Sorry. Welcome in, man. Thank you so much for being here and for modding for me. Appreciate that so much. Mind Tapestry, welcome into you as well. Thank you for being here. Eddie, thank you for being here. Yes, I will stay still, and I do have that software up and running, so let's hope that that works out. But thank you guys for being here. So guys, I want to discuss, I know we talked about this a little bit in yesterday's stream, but the big thing that I was really watching to confirm a possible bear market coming in was breaking this trend line, this lower trend line of this Fibonacci channel. And this Fibonacci channel has been respected really throughout the entire bull market. And once you start to lose major trends like this, then you're starting to have a reversal in bias where we could see a prolonged downtrend continue, really. For me, this was the big key. First of all, the first big sign of weakness was losing the 107K anchored VWAP from 74K. Really, since we lost that anchored VWAP, I've been bearish. I've been expecting maybe even the 74K lows to be taken out. And we have continued to impulse down. Now, did I think it was going to be this quick and this aggressive? No, I did not. I thought we were going to get some bounces along the way. I thought maybe we were going to be able to get a small bounce at the bottom of our channel and at least see a lower high come in before making another lower low. We did not get that, and we busted straight through our support level, really confirming that the macro flipping sentiment, from a bullish sentiment, from a possible bull market sentiment, now going into a bear market sentiment or a bear cycle, like something like we saw in 2021, where we saw multi-months of downside and kind of a mini bear cycle around the prior lows of Bitcoin before, kind of pushing up and making a double top here. So this to me is a bit concerning. If we close the weekly candle below this 91.5K area of now resistance, then I do think we are going to continue down. And regardless, I do think we're going to continue down because our impulse to the downside is not completed yet on the daily time frame. We have a daily impulse to the downside that looks incomplete. And even within this impulse to the downside, it looks like the third wave might not be complete as well. And the third wave is really going to be from your 116K highs up there. We might see some more downside come in, actually from your 107K highs. So let's talk about this impulse to the downside. Let me go on to my Binance chart here. And from the Binance chart, I'll hide some of this real quick while we look at this. We've been looking at a bigger, let me zoom out to the weekly time frame. We've been looking at a bigger corrective move after finishing our 5-wave impulse. We had that weekly break in market structure by taking out the 91K lows, and that was all the way back in January, the middle of January. We took out the lows, or we took out the lows from January. We took it out in February, and that confirmed that this entire impulse to the upside, a bull market impulse, could be finished, and now we could be starting a multi-month corrective move. Could last up to a year or so. That's what most bear markets are, a year-long cycle before we see continued bullish sentiment on the chart here. And it looks like so far this is playing out pretty nicely. We've been looking at this for months. It's playing out pretty nicely. Now, within your C wave down, you're looking for a 5-wave impulse within itself. And if we zoom in on the charts, let's zoom into the daily time frame. from our all-time highs, we are looking like we are in an impulse to the downside. And if I go ahead and turn on that impulse to the downside, it looks like we could be in a 5-wave impulse to the downside, with potentially our third wave ending once we hit our pitchfork lower band of the pitchfork. And this is of a multi-cycle pitchfork. So let me hide some of this pitchfork. I've shown you guys this pitchfork many times on the chart. It is just our multi-cycle pitchfork that is pulled from the COVID lows, up to our 65K highs, which was the highs as far as volume goes and as far as momentum goes. It was the highs of the market, not the 69K highs. And then down to our bear market lows. And if we look at this pitchfork, very similar to our Fibonacci channel, this pitchfork has been respected on macro levels pretty much to a T. Like, it's been really, really respected. Every major swing level has been respected. Every major low, every major high has been respected here. And a few weeks ago, when we made our all-time high, but rejected from our pitchfork midline here, we saw that kind of 3-tap distribution, tap 1, tap 2, tap 3 here. That distribution at the midline, we were projecting that we could get a drop all the way to our lower band. And in that drop to the lower band, we wanted to see impulsive price action to the downside. We did see the warning signs on the charts, and I warned about this for weeks ahead of time. We saw the triple drive of bear divs on the weekly time frame. We saw money flow draining out of the asset since that 2024 all-time high. And then if we look even more locally on that distribution range that we were seeing up here, where we made 3 all-time highs within a couple months, we saw NAMI, which is quicker, confirming bearish divergences across the board, and money flow bearish divergences continuing, with money flow draining out of the asset as the range was forming, making it more likely to be a distributive range where we distribute down, just like we did in January and February here, last time we saw one of those distribution ranges. So we have dumped. I don't think this dump is even done yet. If we look at where this dump has ended today, I'm going to go on to the Bybit USD chart. Now, this is another pitchfork that we've been looking at. We have 2 or 3 macro pitchforks that we're looking at. And this pitchfork is pulled from your mid-cycle bear market lows of June of 2021 up to the 69K highs. That was your dead cat bounce or your corrective flat bounce down to the bear market lows. And you can see also that this has been, let me hide that. This has been highly, highly respected as well. You often form, by the way, this is going to become relevant right now. You often form ranges within these pitchfork bands before deciding a direction. You'll form a little bit of a range for a few weeks within the pitchfork band before deciding a direction. So you can see here 3, 4, 5, 6 weeks, 6 weeks in here before deciding a direction. Now, the last time, what we did at the beginning of the year is we rejected pretty much to the exact dollar from the top of the pitchfork, and that completed our 5-wave impulse, 1, 2, 3, 4, 5. Then we saw a multi-month correction to the downside, and we bounced exactly perfect from our the lower part of our upper pitchfork band. These 2 green lines here, the lower part. After bouncing from the pitchfork band, we made another attempt to break this pitchfork. And if we were going to really see a true bull market breakout, then we wanted to break above this. We wanted to break above it, flip it to support, and continue higher, maybe up to 180, 150, 180, maybe even 200K for this cycle. But you can see as we got back up to the top of this pitchfork, that is where that distribution pattern, that distribution range took place. And guys, at major macro tops and major macro bottoms, you generally don't see a rejection in a V shape. You don't see a hit and then back down. You wait. What smart money does, because they have such large positions, is they're unloading their bags up in here, up in this range, while retail is buying the hype of the all-time high, buying the hype of an alt season, buying the hype of whatever, crypto sentiment. We saw something very similar in 2021 when we saw this distribution range up here, while everyone was buying the release of the Coinbase IPO, all these different things like that. We saw retail buying like crazy, and then we got that distribution to the downside. In early January, after Trump won the election, we saw the Trump pump from the election. in January, Trump was getting inaugurated. They said, oh, once Trump gets inaugurated, we're going to see that Bitcoin reserve come in, America's Bitcoin reserve come into play. He's going to buy it. Bitcoin's going to shoot up to $1 million per coin. We saw a lot of hype in here, and we saw a lot of people buying the top, buying the all-time highs, a lot of retail. We had that distribution pattern, and we distributed down. Now we saw this. The Fed finally starts cutting rates. We got, oh gosh, the Fed's going to turn on the money printer. The Fed's going to cut rates. Here we go. Altcoin season is going to take off. And once again, a distribution up here, and we're starting to distribute down an impulsive price action to the downside. So we see this pattern play out over and over and over. And near macro highs and macro lows, it's generally not a one tap and then down. It's a distribution pattern that takes place over time, over a couple months. You see whales offloading their positions and willingly selling it at all-time highs to retail that is somewhat uneducated, or that is, just hyper bullish and always on up only mode. And once again, we're getting that distribution to the downside. Now we are coming to some key support. I do have to say, I don't think this impulse is done, and I do think we could come next Monday, hit our 78K support level, which I will show you guys in a second. But now, knowing that this pitchfork has been so highly respected, that we do form ranges within the pitchfork bands, before continuing the move, we are now down back inside of our pitchfork band. And if we zoom in onto the daily time frame, you can see that's kind of where our low was today. We wicked a little bit past it, but our low was down at the bottom of the pitchfork band. And we are in the impulsive move to the downside, a 5-wave move to the downside, because it's more likely to be a 5-wave move to the downside because of increasing volume on this drop. If we look at the volume, yes, it's a little bit skewed because that mega liquidation event that happened on October 10th. But if we look at all these spikes in volume here, all the spikes in volume are red spikes in volume to the upside. We are seeing increased volume to the upside. And if we look really from our 107K lows, or our 107K bearish backtest to the anchored VWAP, let me go ahead and go on to the Coinbase chart real quick. You can see here, look at the volume increasing, and Coinbase is the chart that I look at for volume, guys. And even above the October 10th crash, Coinbase is a spot exchange, which doesn't have that leverage that some of these derivatives exchanges do have. But volume is continuing to increase on the dump to the downside, making this far more likely to be an impulsive move to the downside that is not done, a 5-wave impulse to the downside that is not completed. And we do have more dumpage to come in the next days, in the next weeks, possibly even in the next months here. So I am looking for continued dumpage. Now, over the weekend, because we are going into the weekend, we could form a little bit of a range inside of this pitchfork band here, and we could actually spend a week or two inside of here. Or what I'm actually looking at is we do have some really nice support levels. Let me zoom out to the weekly chart, and we'll throw on that weekly support that is going to be around 78.3, 78.2. And if we look at this weekly support level coming up, we do have a weekly support level with a naked weekly point of control and a naked daily point of control at 78K. There's also a key trend-based Fibonacci extinction of this impulse to the downside that is aligning perfectly with this level. And we could see a continued drop to the weekly, a fake out of the band, and then you kind of start to range within the band for a bigger wave 4 before seeing a wave 5 to come down to 70K. But if we now zoom in onto the daily time frame and we look here at our impulse to the downside, I'm going to go back to the Coinbase chart here. I am going to turn off our macro fib channel. And just wanted to say the fact, before I turn that off, the fact that we closed the daily candle below that fib channel, yesterday was our first daily candle close below our Fibonacci channel, possibly confirming a breakdown of our bull market support, that is our bull market trend that has held us the entire bull market, and possibly confirming a bear market, or at least an extended bearish cycle, similar to what we saw in 2021. So you see we broke down with volume. We got a big bearish engulfing candle on that breakdown of that macro Fibonacci channel, and then it's continued so far today. We do have a pretty nice wick on the bottom today, but I expect with this volume increase to the downside, we are still in the third wave. We are still pushing down within a third wave. And if we look at our trend-based Fibonacci extinction targets, so first let's hide this macro Fibonacci channel, and we're going to look at the move down from the all-time high. If we're looking at the move down from the all-time high, I'm really now looking at a 5-wave impulse to the downside. Now, that is your third wave within the 5-wave impulse. So let me grab the bigger 5-wave impulse right here. Okay, let me hide this one. So within your 5-wave impulse to the downside, possibly coming down to 69K to our macro golden pocket that is at 70K to 68K, taking out your lows and also coming into the value area high of this range here. What I'm going to be looking for is this third wave doesn't look like it's completed yet. Now, if we zoom in and analyze this impulse to the downside so far, let me go ahead and hide this. We can see that that October 10th drop, this was a wave 1. We had our 3-wave corrective move in a wave 2. We had a secondary wave 1 and a secondary wave 2. Now, why am I saying that? Why is this considered to be a double 1-2 impulse? Because if we look at the lows from our initial wave 1 and the highs from this, we wanted to count this as a 1, 2, 3, 4, 5. We cannot validly count that as a 5-wave impulse to the downside because you have overlap of the lows of wave 1 with the highs of your wave 4 if we were counting it like this. And that is a hard invalidation for an Elliott impulse. So instead, we actually have to look at an even more bearish impulse to the downside being a double 1-2 impulse where we have a wave 1, a wave 2. Here's your secondary wave 1 and your secondary wave 2 because of that overlap. And we are in the big third wave to the downside, the big explosive, longest, most volume-filled wave to the downside. And you can see volume very rapidly increasing on this push to the downside, suggesting that this is a third wave of the impulse to the downside. Now, if we take our trend-based Fibonacci extinction, let me go ahead and get rid of this. If we take our trend-based Fibonacci extinction and we go from the highs of wave 1 to the lows of wave 1 to the highs of wave 2, and we look at our trend-based Fibonacci extinction, the most common target for a third wave to end is the 1.618 Fibonacci extinction. So let me just throw that on the charts. The 1.618, yesterday we were looking at this target at 84K because guess what? It was also where a naked weekly point of control and a naked daily point of control was. That was that support box that I laid out in yesterday's live stream. But we did bust straight through it throughout over the night. We busted even through our monthly level and we came down. I do not think this third wave is done. This third wave is done with in here. And if we look at our 2-to-1 Fibonacci extinction, which is another common target, especially in these very first starting impulses of a bull market or a bear market, you generally will see very explosive third waves. Like look at, you have your 1, 2, 1, 2, and then look at how big your third wave is here. All of this being a third wave up. I mean, that did pass the 1.618 Fibonacci extinction. If we look at that 1.618 Fibonacci extinction, you can see that we passed the 1.618. We even passed the 2. We came up close to the 2.618 Fibonacci extinction. And what we see oftentimes, it came very close to that 2.618 Fibonacci extinction. But what we see oftentimes with these initial impulses to the downside or to the upside is you will pass that most common target of the 1.618 with like a wick past it in the daily or weekly candle close at that 1.618. Now, the reason why I don't think this third wave impulse to the downside is complete yet. Now, if we zoom in on the charts, let's now go from the daily time frame to our 4-hour time frame and looking at our Elliott wave pattern here. We can look at within this third wave here, 1, 2, 3. We don't have a fourth wave yet. And then we could see that fifth wave end at the 78K support level where we do have a weekly level. We have a naked daily point of control and we have a naked weekly point of control. Also, for those that aren't aware of logarithmic golden pockets, I believe if we take our golden pocket from the 49K lows to our all-time high and we turn on the golden pocket, your regular non-log golden pocket is going to be right in that 78K area of support. And a lot of people that don't understand that if you have more than a 100% move to the upside, you should base that fib based off log scale. You should turn your chart to log scale. you should also correct that Fibonacci to make it based off log scale. The people that don't understand that are going to be looking at this 78K support as well. So we do have a lot of confluence at 78K for a potential third wave of the impulse to end to the downside. Now, once that ends, we're not looking at that being the ultimate low of the bigger daily impulse to the downside. What we're looking at is seeing one more fourth wave. So let me turn on our larger 5-wave impulse, not that one, this guy here. We are looking for a fourth wave corrective move that could last up to a couple weeks. Let's see. On our wave 2, we saw that wave 2 last about 10 days, 10, 11 days here. And your fourth wave corrective move is generally longer than your second wave here, your initial second wave. And so we might see a corrective move for a couple of weeks, bouncing from 78K, maybe potentially even coming up to 90K before continuing down to 70K, where we could end this impulse to the downside. Now, after this impulse to the downside ends, even if we are confirming a bear market, what you're going to look for after an impulse ends, remember, if I go back to the Binance chart, after our 5-wave impulse ended on the, let's see here, where is it at? Anyways, after your 5-wave impulse ends here, you're looking for some sort of corrective move. Oops, didn't mean to do that. You're looking for a corrective move here. And after any impulse, you look for a correction. So now we go back to the Coinbase. We're going to be looking for some sort of correction, whether that's a sharp zigzag ABC correction up to your golden pocket, or it's going to be a flatter correction or even a complex correction where we could see multiple 3-wave zigzag corrective moves. You could even see a flat in here. Now, a flat on top of a flat is very rare, so I don't think we're going to see that. But if we are starting a bear market, you still expect after this impulse is completed here that we do get a strong bounce to create a lower high on the charts, and that will be our swing short position. So we have a 5-wave impulse down, a 3-wave corrective move up. If this is a 3-wave corrective move up, this area on the end of the 3-wave corrective move is swing short territory. Swing short territory to take down, and we might see a prolonged bear market. Now, remember, there's also the other theory that we've been talking about on this channel for quite some time here. Zooming out onto the weekly time frame, we've been talking about our 5-wave impulse completes on the weekly time frame. We see a flat correction coming down to take out your 74K lows down into your 70K support. That is the corrective move from this impulse. And then in a super cycle, you start another impulse to the upside. So maybe a mini bear market, we could say, a 6-month long to a year long corrective move. And then you see that another super cycle come in, another impulsive cycle that could last a couple years come in. And this is the bullish case scenario. The bearish case scenario is that we're about to drop much further than anyone ever would imagine, maybe down to 35K even. Not going there yet, but in a sharp corrective move, if we look at after an impulse ends, what is your most common support level as far as Fibonacci targets go for the bounce to the upside? It is your golden pocket. Now, remember, this is a 600% move to the upside. So we have to take that golden pocket. We have to put it based off log scale. And your most common corrective support on a sharp corrective move to the downside, if we're going to see a sharper corrective move to the downside here, 35K, which also happens to be the most important support resistance flip of the entire life of Bitcoin. So that is my worst case scenario. That is where I buy up. I sell everything I have. I buy up Bitcoin, and you look for new all-time highs from this area. We are still a long way from even taking that into consideration here. But guys, it does look like we are confirming that kind of bear market, at least a bearish trend that could last some time. So now within our impulse to the downside, increasing volume on the dump to the downside, showing it's more likely to be a third wave. Third wave looks like it's not completed yet. Could be coming down to our 78K support, to bounce from our 78K support. And if we look at, now we're just going to do a little bit of a mind experiment, a thought experiment here. We're going to take our Fibonacci from the highs of our wave 3. Now look at this is, it's a double 1-2. So you're putting your initial 2 on the primary 1-2, but This is the start of our 1-3, that rejection from 107K. And then we go down to our wave, to our 78K support. Now we could put it right on that weekly, and we're going to look between the 382 and the 0.5 for our corrective move in a wave 4. Your wave 4 could last some weeks, and your wave 4 is going to come up between the 382 and the 0.5 Fibonacci. So we could get a bounce from 78K all the way to come back up to 90K or 92K to backtest that area. And remember, that area also happens to be our value area low of our range that we're breaking down right there. Value area low of the range is breaking down. So after bouncing from 78K, you come up, you bearishly backtest that value area low. If you reject there on a higher time frame bearish backtest, you expect to make new lows. And we would expect to come down at least to 74K, but potentially even to 70 to 68K. And then we could see this impulse end, and we could get a larger relief rally that could last some time. Now, upon our fourth wave bounce, as our fourth wave bounces, we're going to want to see volume going lower and lower and lower on the rise to the upside. On this rise to the upside here, we want to see volume continuing to decrease. Then on our last initial impulse to the downside, our fifth wave impulse, we'll see a small spike in volume. But as we're making new lows within this 5-wave impulse, 1, 2, 3, 4, 5, we want to see volume going lower and lower and lower, because you want your volume to be the highest in the third wave. It peaks out at the, in the middle or the end of the third wave. And as this 4-5 happens, you're going to see volume decreasing here, showing you that this impulsive move is getting exhausted here, and we could be finding macro support and bigger reversal, at least a reversal to make a lower high before making another lower low. So this is what I'm going to be watching over the next weeks and months on Bitcoin. Now, this could take quite a while to play out. Let's go back to our Coinbase chart, or Binance chart here, and we're going to turn on that trend-based Fibonacci time. Let me just turn off this volume. It's annoying me. Okay, trend-based Fibonacci time. And if we look at our trend-based Fibonacci time, remember, we're taking, as far as our time of the corrective move goes, you go from the start of the impulse to the end of the impulse, and your corrective move, the minimum target for the corrective move, is generally making a low after the 0.382 is hit. So we've got our 0.382 time target at least met, but we could be in a corrective cycle all the way up until May, up until midsummer. We could be in a corrective cycle, an overall downtrend. Now, it's not going to do this. It's not going to be a straight downtrend. We are going to see bounces along the way. This impulse ends at 70K, get a move up, maybe to 90, 93, 103K. 103K is that 50 EMA, weekly, 50 weekly moving average, and then we might reject that, and then we might come back down. And somewhere around this area, the 0.618, we could see the end of a bearish mini cycle before starting another impulsive move. Now, that is a more bearish scenario than our flat corrective scenario, which is this scenario I have on the chart right now, where we see a flat correction coming down to 70K or 74K, taking out those lows and starting another impulse to the upside. We don't know which one it's going to be yet. We don't have enough data on the charts, and we are not coming down to those lows yet. But within this C wave, we do expect to take out the lows of our A wave. And that is looking more and more likely with every passing day. And it's looking like it's happening more rapidly than we even expected. Guys, so I will say hi to everyone, but before we do that, I want to talk about potential bull divs on the 12-hour time frame, lower lows on the price action, and we were seeing higher lows on the momentum waves, and we were waiting for that money flow to kind of bottom out. But now we have invalidated the 12-hour bull divs. It's equal lows here. Also, if we look at NAMI, we have invalidated the bull divs now with this momentum wave that was made in today's crash. We have invalidated the bull divs on the 12-hour time frame. So that is very bearish to have those bull divs invalidated. Now, remember, even yesterday, if we zoom out to the daily time frame, we had invalidated our bull divs on the daily time frame already between the what was that 198 99K lows to our lows, we have now invalidated bull divs on both NAMI and Market Cipher B. NAMI's money flow, which is quicker than Market Cipher B's, is leaving the asset pretty aggressively. And with this daily candle close being another red candle, I expect Market Cipher B at the close to continue kind of dropping to the downside here on the daily money flow. So no bull divs, no money flow bottoming out, not a macro bottom. To me, that tells me we're not at a macro bottom yet, a more macro bottom. Zooming into the 8-hour chart. On the 8-hour chart, we were looking at some nice bull divs that were developing. We had the higher lows on the charts, and it was developing really nicely here. We wanted to see, we even saw it with Monday's low, the money flow kind of starting to curve up on the 8-hour. But now with this last couple of days of crash, we have invalidated the bull divs. Actually, not quite invalidated the bull divs on the 8-hour, but we don't even have confirmed bull divs, and money flow is aggressively leaving the asset here. Now, on NAMI, we do still, from this push down from 107K, we are still developing nice 8-hour bull divs here. And money flow is overall starting to curve to the upside. So, yes, we could see some relief come in for a week or 2 weeks. I'm looking at 78K really being a very, very crucial support level. And then, 78.3 to like 77.3, because we have a naked weekly point of control at 77.3. But if we look at all of these, our indicators here, we've kind of invalidated the bullish divergences, at least locally, from very locally. These lows here now have been invalidated. You can see that has been invalidated here. That has been invalidated here. So it is looking like even if we get some sort of bounce from where we're at now, it is probably not going to be a macro bottom. It's going to be a range. And you can see we are kind of chopping around that monthly level. We did wick past that monthly level a little bit, but we are chopping around that monthly, and we are going into the weekend. We know that weekends often form ranges, and we are inside of our pitchfork band. We might form some sort of range in here, and before seeing that bigger drop, or, a little bit of a drop down to complete our third wave. And then the fourth wave gives us a bigger range up to 92K. And then we get a drop down, or even, we'll see how that works once that starts to play out. We don't have enough data on the charts yet. But welcome in, everybody. I hate to be this bearish. I hate to be the bearer of bad news here, but I'm just going off the technicals of the chart. Everything does look bearish. We had the monthly bear divs on the monthly chart. We were warning about this as the distribution range was forming up here. I was warning you guys, monthly bear divs confirmed, triple drive of monthly bear divs confirmed. Money flow has now started to curve down. And with this monthly close in 9 days, if we close a big bearish engulfing candle like this in 9 days, red, this monthly money flow is going to start to come out just like the weekly money flow did last week. So if we zoom into the weekly, you can see how that weekly money flow started to really turn down last week with that weekly close, and it will be very similar. You can see on NAMI, the weekly money flow crossing over into the red and aggressively leaving into the red. So going back to the monthly chart, we might see that big turn down on both NAMI and Market Cipher B as far as money flow goes if we close that monthly as bearish as we look now. On the weekly time frame, again, guys, we saw this, the triple drive of bear divs from the 2024 all-time high. Triple drive bear divs, money flow now aggressively leaving out of the asset. The bear divs, money flow draining out as the range was forming for all of 2025 pretty much. You can see right at our 108K all-time high, money flow topped out. We've been draining out, making bearish divergences on money flow as well. You can see bearish divergences on money flow as well here. We saw the warning signs of a bigger corrective move coming. We were at some macro targets, some macro resistances on the chart. So yes, I do think we are going to continue to drop here. Could we get bounces? Are we likely to get bounces? Some relief? Yes, we are. A few weeks ago, if you go check my live stream from a few weeks ago on the liquidation heat map, remember we had that liquidity that was in the mid to low 80s. And I talked about that, and you can go watch one of my videos, I think from last week. We had some liquidity down in the mid to low 80s. Well, we have finally come down and taken out all that liquidity. You can see 82K. We kind of came down and took out all that liquidity that was resting down in this area. So finally grabbing that liquidity we've been waiting to grab for months now. And even if we just look at not even the liquidation heat map, but if we just go by simple what we know about people, traders anyone that longed around the 74K bottom, they're going to be putting their stops below those 74K lows. And we do have some liquidity that is going to be resting below those 74K lows. We have literally wiped out all the liquidity on the way down, and coming down to take out those 74K lows would be a big liquidity sweep. And that's what we know we have people waiting for. Another thing that I want to talk about, it's not really technical analysis, but it's more of fundamental analysis. We do know that MicroStrategy has been accumulating Bitcoin at historic levels, taking the every chance they get, opening bonds at 0% interest so they can collect money so they can buy more Bitcoin. And they have over 50% of their net worth into Bitcoin, of their treasury. And we did see the MCSI exchange, that one of the indexes, which is has $14 million under risk, assets under management, AUM. And they did put out a post convincingly, maybe not so randomly, on November 10th when we saw that big crash, that they are going through a process right now of banning any company, any crypto asset company, or any company that accumulates crypto assets as a form of a treasury. They're going to get rid of them. They're going to get it off the stock exchange, not allowed it to be on that indice, to trade on that indice. So that was when the October 10th crash happened. And then, of course, since then, we have been seeing now some fears about that. Actually, who posted that in my Telegram today? Whoever posted that in the Telegram today, I really appreciate you posting that video. It was a video, actually, Crypto Banter was the one who made the video, but Bloomberg covered it today. There was a bunch of people that covered it today. It was a really good video. I recommend you guys check that out. Let me actually grab that video and I will post it. It is very concerning because just like Jason has been saying, we do think that this bear market bottom could be kind of with MicroStrategy being forced to sell off some of their Bitcoin, or being forced to really go under in some ways. All right, give me just a second, guys. I am looking for that. Okay, got that. I will post that in the chat here. I really do think that this this YouTube video did explain it well. Whether you like Crypto Banter or not, it is absolutely relevant for what's happening right now. Okay, let me come into the chat, say hi to everybody. Roy Official, welcome in. Thank you so much for being here. And Bullish on Parade, welcome in. 100x now. You guys, if we see a bounce now, it's not likely to be the major low. We have increasing volume on this dump to the downside. That is a very key sign that it is not a macro low. When you see volume increasing on the dump to the downside, it is likely to not be a macro low. Yes, we're on the 6 hour. That's a 6 hour green candle. So that's going to be green volume. But make no mistake, zoom out onto the larger time frames. We are in increasing volume to the downside on this dump. Quiles 1100, welcome in, man. Brother Nature Joe, welcome in. Good morning to you as well. Chad P, welcome in. Yeah, alt portfolios also just wrecked, guys. I mean, I've tried. I've had a pretty bad week of trying to long some of this stuff, some of these support levels on alts, and so got stopped out a couple times. I was in the short from 107K on Bitcoin. Took profit at 91.5 and 92.5, I think it was. Yeah, the value area low. But really, it's been a crazy dumpage week. Okay. Yeah, a baby bear market. Yeah, Eddie, it could be a baby bear market, or like a mini bear cycle like we saw in 2021. And actually, we've already met our minimum requirements. Once again, guys, if we go back to that time-based fib, we've surpassed the 382 time Fibonacci now. So the corrective, as far as time goes, this low could be the low as far as time goes, but as far as price goes, we really want to take out the lows of your A wave. And we have not done that yet. Yeah, 35K is guys, I'm saying that's a technical target. I'm not saying we're going to go down to 35K. If we do, it's because MicroStrategy is going to probably be forced to sell Bitcoin so that they can participate in those indices, so they can participate in that indice, that major indice. And also the NASDAQ will probably delist them as well if the other indice delist them. So we could be seeing them forced to kind of sell at least some of their Bitcoin in order to meet that requirement of having at least less than 50% of your treasury in crypto. Okay, Botketo, welcome in, man. Thank you so much for being here, and thank you for that nice comment. I appreciate you so much. John Hanks 5247, welcome in as well. Jody Pin, welcome in. Andy, what's up, man? Andrew, it's good to see you, dude. Thank you so much for being here. Thank you for modding. Machi HK, guys, this guy's a legend. He's been calling for the dump. He's awesome. But yeah, Machi HK, I was expecting a dump too, but not this hard. So this dump is way harder than I expect. Absolutely, man. It's just quicker. I was expecting some dumps potentially to come down to take out your lows of the A wave, but not this quick, not this aggressive. Let's see. Senior Traversera. I think that's Travi Trades. Is that you? Let me know, Travi. But welcome in, man. Thank you for being here. Oh, you might be gone already. Okay. Baby Genius, welcome in too. Did you see a bounce up potentially prior to going towards 74? Yes, we will see some sort of bounce. I think 78K, around that 78 to 77K area is going to be a bounce level for sure, because we need a fourth wave. Within our bigger daily impulse to the downside, we are going to be looking for a fourth wave bounce that could bounce us maybe, $5,000-$10,000 here from 78K, maybe up all the way up to like 90K or so. So yeah, $12,000 move, $13,000 move to the upside. But after that, we're going to be expecting a new low to come in as well, just based off the larger impulse. Okay. Clear impulses down. Yeah, it's a clear impulse down. It's a very clear impulse down. Taki Uda. I'm sorry, I'm not even going to try to pronounce that. I know who you are though, but welcome in, man. Thank you so much. And it is a strong impulse down for sure. Sailor's margin calls at 74K. Absolutely. We also know that now. Remember, guys, he's accumulating spot Bitcoin. So if he goes down 74K, he's going to be underwater, but he might not. The only reason he's going to have to sell is if he's taking out leverage against that. He might have to get margin called for some of that. But for a large part of 2022, Sailor was underwater at some point, I believe. When Bitcoin was around 15K, he was underwater on his Bitcoin purchases, and he didn't sell any then. So just because he's under his average accumulation price doesn't necessarily mean he's going to have to sell it. But we could see pressure from the indices and pressure from his board that is going to make him sell some of that. Because I'm sure the board, the MicroStrategy board, is going to want to stay on those indices where there's billions of dollars that are traded on those indices, with MicroStrategy being a big part of that, billions of dollars a day. Yeah, all the names are different. It's I think YouTube changed that 2 days ago, and it's pretty annoying that they did that. Trying to figure out who everyone is still in some ways. But yeah, Mark Dutch, I typed "dump me harder, mama," and Google sent me here. Yep, yeah, I'm the bear now, dude. The dumpage bear, and your mama will always send you here. Welcome in, Mark Dutch. Thank you so much for being here. Thank you for modding. It's a pleasure. And Arping, thank you for modding as well. Guys, yeah, Sailor's average price is around 66K. Oh, okay. I thought it was around 74K as well. I guess we could double check that. Either way, guys, it doesn't matter what Michael Saylor's price is necessarily. The big thing is we could see Michael Saylor being forced to sell some of it so that he can meet that requirement of being 50% under his treasury being under 50% Bitcoin reserves, and that way they can trade on MicroStrategy can trade on the indices. Let's see. Yep. Okay. So Mach HK's got it. He owns pretty much 650,000 Bitcoins as of November 7th, 2025. Okay. The average purchase price of $66,384 per Bitcoin. Okay. 66K. Now that is interesting. So here's the thing, guys, 66K, if we bottom out at 70K and we see a pretty big rise at 70K, we could be looking for a move up. Let's say we're going to be in a bearish cycle. Let's just pull it to that 618 and we'll look at the golden pocket. Now, remember this golden pocket, because this is more than a 30% move to the downside, I believe it is going to be. Yeah, that's going to be a 44%. So we're going to take this and put it on log scale. and you're going to be looking at about $101 to $103,000. Now, this is very interesting, guys. Say we end our impulse down at 70K and we see a big push up, a corrective, even if we're going to make a lower high in a bear market, you expect at least a 3-wave corrective move up to that golden pocket. Now, let's turn on our 50-week moving average. We know that the 50-week moving average has historically been support in bull markets. You know, support, support, support here. And all through the bull market, it's been support. If we look at our prior bull markets, it was kind of support. And then once you broke it to the downside, it turned into resistance and you continued the bear market. So look at the last bear market. Broke it to the downside, bearish backtest, rejected, bear market confirmed. Now, what if we see in this bull market, we see after bouncing from 70K, we get that 3-wave corrective move up to backtest our 50-week anchored 50-week moving average. If we reject on that bearish backtest, which would happen to be where your macro golden pocket is, confirm a bear market. It makes sense as far as historical price action goes. So now that we're losing it and closing weekly candles below it, we can suspect that, hey, maybe we are going to see the same exact thing happen as well. So 103K would be a very big resistance area. And by the time we get back up there, this 50-week moving average is probably going to drop closer to 101K. So 101, 103K is going to be important. Now that depends. This Fibonacci golden pocket right now is completely theoretical because we have not come down to 70K yet. Right now, our Fibonacci, our macro Fibonacci golden pocket is at 107K, which also happens to be another very, very important level. It was where our anchored VWAP from the 74K lows was, and that's another very important level on the charts. So I don't think the low is in, guys. Let's just say that. I don't think the low is in, but yes. Guys, please hit the like button. If you get any sort of insight into the market from this live stream, please hit the like button. Also, I do want to take just a quick second to shout out the partners of the channel. The main partner of the channel is going to be BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link, you'll get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts if you deposit some of the larger amounts. They're offering some great futures trading bonuses, up to $8,100 in futures trading bonuses, depending on how much volume you move in those markets. And they're offering some of the best initial deposit bonuses in the entire industry. 50% deposit bonus. If you deposit just $100, they'll give you a 50% deposit bonus. And then they've got various 20 and 10% deposit bonuses if you deposit some of the larger amounts. I've partnered with BYDFI to create a Telegram community where I do post my thoughts on the market. I do post trade setups in there. And if you're interested in joining that Telegram community, it's free. All you need to do is sign up with BYDFI using my affiliate link and deposit just $100, a minimum of $100 into the exchange. That $100 is your money to trade with. You'll get the bonus. You'll get the discounts on the trading fees. And once you've deposited the money in your account, then you can click on the Telegram link in the description of this video, type in /verify in your user ID, which will be a string of letters and numbers right up here. And that'll get you access to that Telegram community. And once you're in, you're in. It's free. I think it's a win-win for everyone. Second partner of the channel is going to be NAMI Trading. NAMI is this momentum and money flow indicator down here. And of course, I use this for confirmations on trades. Like as we're coming down and making this low right now, do I see bull divs on the chart? If this was going to be a more macro bottom, we would expect to see bull divs maybe on the daily or at least the 4-hour, 8-hour time frame. And so I use NAMI and Market Cipher B, but NAMI is quicker. I use NAMI to look at, do we have confirmation to take along? You know, not really. We've invalidated those local bear divs, bull divs on the 4-hour time frame. And so NAMI is a great tool to help you either get into trades or stay out of trades, exit trades. If you're interested in purchasing NAMI, they are doing a 50% off discount code if you sign up with NAMI using my affiliate link. So the RPink just posted the link in the description. Thank you, RPink. And thank you, Mark Dutch, for posting the BYDFI link in the description. Though NAMI 50% off discount code, and I don't know how long that's going to be running. I think he did say he is going to have some Black Friday deals coming up soon too, so be prepared for that. I will let you guys know if we do have some Black Friday deals coming there. But NAMI is the second partner of the channel. Third partner and fourth partner of the channel are Bybit and MEXC, both great exchanges, giving discounts on trading fees and some futures trading bonuses. Also, a 10% initial deposit bonus. So if you want to trade, sign up with MEXC and trade on there. MEXC, Bybit, both great exchanges. It's just a way to help the channel. If you're interested in signing up with those and you use my affiliate link, I just say thank you guys for being here. Thank you for everything. So let's get back to the TA here, and let's go to check out our total market cap. Now, guys, look at where we're at on our total market cap. Now, we busted past our golden pocket, which is kind of bearish for me. We've broken that golden pocket. Let me get rid of that. And we are at the bottom of our pitchfork. Now, on as far as our bullish pitchfork, this is the same kind of bullish structure. If we're looking at that 5-wave weekly impulse, a wave 1, wave 2, wave 3, wave 4, wave 5, and we're looking at that same sort of flat correction to come in here on the total market cap that we're looking at on Bitcoin. Bitcoin is already broken its big pitchfork to the downside. So let me just go ahead and hide this. I'll hide this here. And we will look at that wave 3 pitchfork on Bitcoin. Not that guy. Wave 3 pitchfork. Bitcoin has broken it to the downside. And actually yesterday was our first daily candle close below it. We broke down, we closed below. It was our first daily candle close, confirming the break of a major trend that lasted the entire year of 2025 and half of 2024, or a quarter of 2024. So very big macro trend, bullish trend that is breaking to the downside. But if we go to our total market cap has, first of all, it did reject perfectly at the top of our trend. For a wave 5, you often see it reject exactly at the top. We did. And then we rejected the upper band 3 times, 3 perfect rejections from the upper band. We have now come down to the bottom of the pitchfork. And we could see a bounce here or relatively soon from this area to make a lower high before breaking this thing to the downside. We might see something like that. We might see some relief come in soon. But overall, I do think this bullish structure, this bullish trend has a probability to break to the downside, to continue the impulsive move to the downside, and really come down to take out the lows that are hovering around 2.3 trillion. And if we look at our macro log golden pocket from our big last 2024 low, that range low of 2024, and we look at that golden pocket, yep, got that on there, it is going to be coming in right around those lows. And what would be nice to see is the swing failure pattern of these lows. If we're looking at a flat correction in here, maybe come down, just wick past that a little bit, grab those lows, close the daily, the weekly candle in your golden pocket, and then see that move up there. Seeing that flat correction coming down, hitting your macro golden pocket, and then going. So this is something that I'll be watching for. But that means that total market cap is going to break down from this bullish trend, just like Bitcoin did. And if we look at Bitcoin, you see that Bitcoin on its first couple of days, it came down to the bottom of the pitchfork here, and we wicked past it, but we closed the daily candle above it. The very next day, we wicked down below, made new lows, but we closed right at the support level. And then it was on the third day that it finally broke. So total market cap could wick past it, close above, maybe a wick past it, maybe a hold of the bottom of the pitchfork. Over the weekend, we see kind of the bottom of this pitchfork hold in here. And then Bitcoin maybe drops to 78K come Monday. We get one last wick down. We get a little bit of a relief rally in a wave 4 that could last a couple of weeks before seeing the bigger breakdown. And that could be the breakdown to 70K for Bitcoin. And this could be the breakdown of this pitchfork. So we'll see how that plays out over the next couple of weeks here. But it just looks bearish, guys. I mean, once again, we turn on the volume here, and yes, because this total market cap takes into account like a few of the exchanges, that wick on October 10th, that volume is crazy. But if we exclude that volume, you can see that overall the dump is increasing in volume there. Very similar. I wish Coinbase had like a total market cap chart with Coinbase, like based off Coinbase volume. But I hate to be this bearish, and I do think we are going to see some relief coming in soon. Our big relief that we wanted to see was up here, excuse me, at 91K, 91 to 92.5K. If you guys remember, that was our value area low of our range. if we just throw that range on, it was kind of the value area low of the range in confluence with your anchored VWAP from the 49K lows, and it was also the bottom of the pitchfork. And we really wanted to see this hold. We really, really wanted to see this hold. It didn't hold. And then you got the breakdown. And then, of course, after hitting into 78K, we might see the bearish backtest of that value area low and of that pitchfork before breaking down to 70K in your wave 5. 1, 2, 3, 4, 5, with some sub counts in here. Sub 1-2s. Huge head and shoulder there in market cap. Yes, it is a huge head and shoulder. So that is, once again, guys, with these macro cycle tops and bottoms, you often will see that kind of head and shoulders pattern play out, or like a topping. It's a distribution pattern is what it is. If we zoom out to the weekly time frame, you know, you could have your tap 1, tap 2, and then say we come down to 70K. We come up to the golden pocket for that lower high. That's your tap 3. That's your model 2 distribution. Breakdown, bear market, maybe 35K, maybe 50K, you know, before seeing a bit of a accumulation and then another go up. So yes, we could see that play out here. We could see that model 2 distribution, or on Bitcoin, you know, model 1 distribution play out like we see. That's Bitcoin there, but, you know, same thing on total market cap. You could see that kind of head and shoulders play out where you drop to 70K or drop to the golden pocket, take out those lows. That's kind of your neckline, by the way. You get a rise up to the golden pocket, and then you see the bear market start. Confirm. To me, in some ways, the bear market's confirmed already. If we close the weekly candle below our Fibonacci channel, I'm saying bear market confirmed, or at least a multi-month bear cycle like we saw in 2021. I mean, guys, we're already down 40, what is it, 40-something percent? Are we going to wait until Bitcoin's down 60% to call bear market? By then, the bear market's going to maybe almost be done with. So right now, we're down, what is that, 33%, and at the lows, we were down 36%, 37% or so. So what are we going to wait until it's down 50% to say the start of the bear market is starting? Just to me, it's bearish. We are dumping hard. Check out anchored VWAP from Q1 low. Okay, let's see here. Is that going to be November? Okay, wait, December, January. Okay, so is that this low here? No, that's April. That's Q2. So the March low, you're talking about this anchored VWAP right here. March 2025. Yeah, March 10th, 2025. Okay. Yeah, I mean, that was a good support resistance flip area. Look at that on the weekly time frame. You break that, you know, and that's very similar to our anchored VWAP from the lows in April. So Q2 low, but very similar. Yep, man, it just doesn't look good. Also makes bear flag if bounce is corrective and 3 waves up, further confirmation. Yes. So that's the thing, guys. After seeing an impulse down here, if we impulse down to 70K or even 74K and we bounce, this move up is going to tell us everything we need to know. If it's an impulsive move up, then yeah, guess what? We could have been in a flat here and we're bull market back on. Super cycle confirmed, right? But if we see the bounce up in a 3-wave corrective move, now this is where it gets tricky, because in your A wave, you're going to see an impulse. There's going to be a 5-wave subcount within your A wave. There's going to be a 3-wave corrective move in your B, and your C wave usually ends in an explosive impulse to the upside and ends with high volume. The end of this move into your golden pocket will be with high volume. But we will know overall, we can look at this lower time frame impulse. We can look at the corrective move. We'll be able to know whether it's overall, because generally you should still see volume decreasing overall on this move up, from decreasing from the volume of this move down here. So we'll be able to tell somewhat, and we'll also be able to zoom in and look at the Elliott structure and everything like that. But yes, lower high. And also, guys, it would be breaking monthly market structure bearishly. By breaking these 74K lows, break a monthly market structure. Remember, market structure is king, guys. So if we break, let me get to a cleaner chart here. All right, we'll just go to this fresh big get chart. So if we break the monthly market structure bearishly by taking out that low, then because now we've broken monthly market structure, higher high, higher low, higher high, higher low, higher high, higher low, higher high, we break this bearishly. Now that bearish market structure breaks makes it more probable that we're going to put in a lower high before creating another lower low and starting the downtrend now. And so taking out 74K lows would be a monthly confirmation that it is more probable to put in a lower high. We'll see how it plays out here. Okay. Also makes bear flag if bound. Yeah. Okay. Yep. Can you do low time frame, please? Yeah. Let's go into the low time frame here. Let's go into our hourly chart. I mean, guys, we are bouncing from our monthly, relatively bouncing from our monthly, but look at this. Once again, money flow starting to leave out of the asset. Hidden bear div printed on the hourly high that we just saw. Hidden bear div means a continuation pattern, and the trend has been very aggressively down. Also, if we look at our volume is increasing on the move to the downside, especially locally from the day, increasing on the move to the downside here. So it is more likely to continue down. When we bounced, we didn't really bounce from any major support level, or at least not any major support level. I mean, we did bounce from the bottom of a pitchfork band, right? The bottom of a pretty nice pitchfork band. But with that weekly below us and that naked weekly point of control and naked daily point of control below us and our macro non-log golden pocket below us, I do think it's probable that we could roll over and come down there. Now, for the weekend, though, we are going into the weekend. Like I said, these bands form ranges within it, and we could form a range over the weekend, a low time frame range, maybe even coming up to your golden pocket from yesterday's high to today's low. If we look at that golden pocket, we might come up to 88K over the weekend, higher low, and then we kind of see this slow grind, 88K, take out some internal liquidity, flush back down, do something like that, and then come Monday, 78K. So for me, I would be waiting. If you did catch the long, maybe of the reclaim of the monthly, or if you caught the long, you had something down here at 80.5 where the low was, and you caught that, great. I wasn't even looking at that. Just for me, no way, no. Waiting for some sign of relief here. But Eddie, as far as the low time frame goes here, your money flow's leaving out on the hourly again, printing hidden bear div. If we look at the 15-minute chart here, let's go look at the 15-minute chart. All right, so you did have some nice, some bull divs between these two lows here. You saw some slight bull divs. Money flow was still kind of leaving out of the asset, though. Nami was printing nice bull divs. You can see the triple driver bull divs, money flow coming to the upside here. But look at what just happened on the 15-minute even. We keep printing hidden bear div continuations on everything. Now, also what you want to do, Eddie, is look at your volume. Turn on your volume on this push to the upside. Volume getting lower and lower and lower as we're grinding up here. Corrective move. More likely to be a corrective move. You could take your channel from the lows to your higher low, put it there. You start to break this channel down, which we might start doing now. We could come down and, at least see a double bottom now or come down to touch 81.6 again, 81.7 again, and kind of just range here. And what we want to see with this is you could see a little 15-minute inverse head and shoulders where you have that little rounded bottom here before moving up to 88K to your golden pocket. Let's go to the Coinbase chart. Look at how Coinbase looks. Yeah, I mean, volume going overall lower and lower and lower as we're forming this kind of corrective range. Right now, it does look somewhat like a sort of symmetrical or triangles forming in some ways here. Let's see. There we go. And you could be looking at this triangle here. Now, this triangle might break to the upside, and we might come up to 88K. Golden pocket. Let's make sure that's not log. Okay. Yeah. 88K. And it would be nice to just grab some of the internal liquidity right here at 88K. Let's look at our order flow charts here. Ooh, man, big decreases in open interest. Look at this dump that we saw today. Let me zoom out to the 15-minute chart. I mean, the dump that we saw earlier, look at that big spike in volume there. And overall, now here's what is interesting, guys. Overall, for the past couple of days, our move down, we've been moving down for the past couple of days, and it's been on a nice increase in open interest. So you can see it was fresh shorters coming in, all these fresh shorts coming in, successfully pushing the price down. But now we're starting to see that big prolonged drop in open interest here. So pretty much positions are just closing out now. People are getting wiped out. And I mean, it's still shorts coming in, but what it is because our open interest is decreasing here, it's actually long positions getting stopped out. So what is a long position being forced to close? It's a sell. So that's going to make the CVD go down here because a long forced to close is a sell. But we know that it's not new shorts coming in because your open interest is decreasing here. So really from yesterday's low around 86K, 86K, all of today has been just kind of a long squeeze down, a long squeeze to the bottom here. And it's causing that big dump in open interest. Now, we do still have a lot of shorts that are in profit here, guys. We do still have a lot of shorts that are in profit. If we start breaking above, what is that, 86K, that's when we could start to see a bit of a short squeeze to the upside. But we have to break above 86K where, you know, that those fresh shorters were coming in here. But for now, we're just stopping out positions. Long squeeze to the downside. That's what today was, a long squeeze to the downside. A lot of people were probably longing the lows from yesterday, and then we got that volatility kicked in. Boom, dump to the downside. Okay. What's up, Roy? Welcome in, man. Good to see you. That head and shoulders target's about 35K. Well, guess what? That's also the macro golden pocket of the entire bull market. And yes, wow, is the mic still low, guys? We should not be having problems with the mic right now. Let me make sure here, but it does look like, at least on my software, that it is responding good. Maybe that's me sitting too far away again or moving my head. I'm sorry about that. But I am going to figure this out. For some people, they say the sound is just fine, and some people are saying it's not. When I go back and watch the videos and watch the streams, it sounds fine on the video recording. So I don't know what is going on there, guys. I'll have to figure this out. Yeah, Machi HK is right, guys. There's no point in being bullish all the time. A good channel needs to be realistic about market conditions, no moon boys. Well, we're just being objective, right, guys? So the thing is, as traders, we can't let our emotions play into affect us too much. Now, emotions are always going to affect you a little bit. We're human. We're not machines or algorithms. But for the most part, we saw macro bearish signals on the charts leading up to this dump. And we knew that, you know, we were also in Q4 of the 4-year cycle, potentially seeing that the end of the 4-year cycle's right on time here. So yeah, we saw the signs of this. And now that we've had market structure break, really by breaking our 107K lows, these lows right here, when we broke these lows, that was when you could have shifted your macro sentiment to bearish. And that is actually when I did shift it to bearishly. After we touched it and broke the lows here, you know, we saw a dead cat bounce, we took out the lows, and then we took out the highs of we took out the liquidity of your dead cat bounce range. And that is really the start of a macro shift in sentiment from bullish sentiment to bearish sentiment. Okay. Yeah, there's a head and shoulders on Bitcoin liquidity index, which is liquidity versus Bitcoin. There's a massive macro bear div from the last 2 cycles as well. Wow, Crypto Clown World, that is very interesting. What is the ticker symbol of that chart? Would you give that to me and I'll check that out here? Yeah. But yeah, please hit the like button, guys. Please subscribe to the channel. If you got any sort of insight into the market from this video, please do that. That would be very much appreciated from you guys. I just appreciate you guys all being with me here on this dump Friday. A crazy dump for Bitcoin. We're seeing potentially the end of the bear market, or the bull market, excuse me, and the start of the bear market. But I appreciate all you guys for being here. I meant Q1 2024 low anchored VWAP. Oh, okay. Q1 of 2024. So let's go back here. Q1 of 2024. So, oh, wait. I see this low down here. All right. Let's throw that anchored VWAP on. Oh, interesting. Wow. Very, very nice find there. Very, very nice find. Look at that, guys. Anchored VWAPs, I'm telling you, volume levels are so important in this market. Volume levels just really matter. So, man, that's awesome. Great find there. Really, really great find there. Yeah, we might get a small bounce from here, guys, but I still don't think it's the end of the impulse. Yeah, I know, Mark. I got to tape my chin, dude. I got to tape my chin to that mic. Just started printing a new 4-hour and it's red already. Don't go long yet. Guys, the thing is, we want to wait for some sign of strength. And really, even on the 1-hour chart, if we're looking from yesterday's highs, lower low, lower high, lower low, lower high. We haven't even broken 1-hour market structure bullishly. You break that 86K, you might break 1-hour market structure bullishly. Now, on some of the lower time frames, I'm sure we've broken market structure bullishly. Let's go to the 15-minute. Yeah, we did break some 15-minute market structure. You could say that was a lower high that we broke. And we're kind of forming this ascending triangle here. So let's see how this plays out. But I really don't think, something like this, that ascending triangle. And maybe we're going to get a bit of a move up from here. That anchored VWAP was very interesting that we just saw, that Brother Nature Joe showed us. That is a very interesting low that we did stop on there. But look at even the 15-minute time frame. Look at your money flow again. Look at the hidden bear div printing. NAMI about to cross back over into the red here. So at the very least, knowing we're going into the weekend, we could start to form a little bit of a range in here. And that is near our pitchfork bottom. A bit of a range near this pitchfork bottom here. And wait for a sign of strength, guys. Wait, if this week has taught you anything, sometimes trying to catch the knife is just not worth it. Let's see. You just need to put in your mouth and fix the volume. There you go. Put the mic inside my mouth. Or maybe I should just make my mouth a microphone. So anytime I talk, you guys always hear it. I don't know how that would be possible, but now I'm gonna get this worked out, guys. I'm gonna get it worked out because it is annoying to hear there's audio issues. I assume close out any spot hypothetical positions, correct? Well, here's the thing with spot positions, we're on the impulse to the downside. Your initial bear market impulse to the downside. Let's say we are starting a bear market, right? We're going to impulse down to 70K, all the way down to not to 57K, 70K, right? And we're going to come to 70K and we're going to bounce from 70K. You should see at least a somewhat of a decent move to the upside to make a lower high before making a lower low. Every single cycle, you'll see that in. Let's zoom out to the weekly chart. You will see lower highs before making lower lows. So, you have your high, you bounce, and on this lower high here, after breaking market structure on the weekly time frame bearishly, this lower high could be where you take profit on any spot positions you have. Now, you could say that we've already had that, right? So let me now come back to the Coinbase chart real quick. Let me get rid of this pitchfork for a second. And what we could be looking at is that, we had our high, we broke market structure, this high here. We broke market structure bearishly. What am I looking at? I'm sorry. We're on the weekly time frame. I was looking up here. So we had our high up in August. We broke market structure bearishly. And then we came back up because we broke this range here. Now that's a double top. You could even say, zooming into the daily time frame, that 116K high. That's really what we want to look at, because this up here was a distribution range, right? This range up here was distribution. So 107K lows. Remember these lows? So you can see I had this box on the chart a month before we came down there. I had the box on the chart from early August, and we came down there the last day of August or the first day of September. But and remember, that was your macro value area high. If we pull that range back to then, it was your macro value area high. Let's see here. If I pull it to there, around that general area. There you go. Macro value area high was there. That was the bullish back test of your macro value area high. And that was also your golden pocket. If you pull your golden pocket here. So it was your golden pocket value area high here. That was a very important level to bounce from. Well, we did bounce from that level. We made a new all-time high. But then after making that new all-time high, once you saw the crash on October 10th and you broke that low, okay, you broke that low. Now your market structure is flipped bearishly. Then you continued the dump to the downside to 103K. So from this, you now confirmed bearish market structure break, right? On the daily time frame, you've confirmed a bearish market structure break. So now that lower high right there is where you could confirm I'm going to sell, because it looks like we're going to distribute down from this area. Now, personally, I didn't. I was hoping that we would get this range to continue a little bit. And now if you've not sold, I mean, you're not going to sell right now. I mean, you've been dumping for 2 weeks straight almost. So you'd wait at least for some sort of relief rally to come in here, and you're going to sell on a lower high. You have to look at that and sell on lower highs. But we did see macro time frame signals to let us know that we should be selling soon. Also, that's why, guys, when you make new all-time highs, it's always a good practice to at least sell some on new all-time highs, even if you think it's going higher. It's always a good practice to sell on new all-time highs. Okay, I had my last one this morning. Okay, wait. Are we at support? Well, Eddie, this anchored VWAP is very interesting that Brother Joe showed us. The daily candle is probably going to close above this monthly or at this monthly. And also our pitchfork band is here. So yes, we are at some sort of support level, but as far as for the weekend, it might be our low for the weekend. I do think we're going to continue down to hit 78K. That 78K support, let me get rid of these. Where is this? Is this Coinbase? Let me go to Coinbase. That 78K support right here, naked weekly point of control, naked daily point of control, and a weekly level. But it's also going to be your non-logarithmic golden pocket. So if we take this golden pocket from 49K to the all-time highs and we take it off log scale, you can see that's the golden pocket there. So a lot of people are probably going to long that. Now, let me show you guys an example of why that's the wrong golden pocket. Let me just pull this over a little bit more. We do know a golden pocket, or the 618, is a 61.8% retracement, right? 61.8%. So if we take from the all-time high down to the 618, and we throw that trend line on there. Then we take from the 49K lows and we throw it up to the golden, to the 618. Now we look at these two lines. Is that a 61% retracement? No, that's more like the 50% retracement, right? It's not a proper 61% retracement because you're not on log scale. So now if you shift that down to log scale, it's going to give you your proper 61% retracement. Now you'll see that this line here is going to be longer. It's a 61% retracement down to the 618. And your 49K up to the 618 is going to be proper 61% retracement now. 39, 61. Okay, but if you don't have it on log scale, they're almost identical. So I hope that helps visualize the fact why you should use a log golden pocket. If the move is over a 100% move to the upside, you should be using a log golden pocket. Okay, where do you think that lower high will occur hypothetically to dump some losing bags? That lower high oftentimes is going to be at your golden pocket. So let's say, and I covered this a little bit earlier in the stream, but let's say this 5-wave impulse to the downside is going to end at your 70K lows, right? Then you're going to be looking for an ABC correction or even a complex correction, a WXY correction. but it's generally going to end at that golden pocket. So what we'll do, we don't know what our actual fifth wave low is going to be yet. But the second we know that fifth wave low is put in, we can pull our golden pocket of that entire impulse, and we could look at that golden pocket, and that is where you're likely to end your corrective move to continue pushing down here, to continue grinding down here. So that right now, it would be, if the low was put in right now, it would be 107K, but I doubt the low is going to put it out. Let's say the low is going to be 78K, the non-log golden pocket. Let's just say a lot of people are going to do that non-log golden pocket. Once again, the lower high at the golden pocket is going to be a very key lower high. You have internal liquidity from this last impulse down. And we know that a lot of people, a lot of fresh shorts have been coming in on this last leg to the downside. And so there's going to be a lot of stops resting above those highs. If we do get a three-wave corrective move, take out 107K. And that's also kind of your anchored VWAP. 107, 106 now. It's going to be your anchored VWAP of the 74K lows. So you would be looking for that retracement to the golden pocket of whatever this impulse is. And we'll look at that. If you come, ask me that once this dump is ending. Caesar Coco, and welcome in. Thank you for being here. We can look at that. Every bounce we'll get in the coming weeks will most likely just be a short one before the next move down. Yeah, I agree completely with Mark Dutch there. So we are in a aggressive, impulsive downtrend. And guys, if you do get bounces, if you're taking long positions, you're going against the trend. And remember, the trend is your friend until the end. So if you're taking long positions, play them as scalps. Take profit one and set your stop losses to break even, and be willing to take profit earlier than you want to take profit. Don't think that every long position is going to be the long position that breaks you to new all-time highs. Even the 70K one, don't think we're going to bounce from 70K and go to new all-time highs. I do have to say that's a bit tricky there at that 70K, because there is a possibility that we could, 70K and then new all-time highs with a flat correction in here. But that's why you can take a partial and hold it open. Do the schlong method that Jason is really famous for. Long from the bottom and take a partial profit, leave it open to either get stopped out or run up to new highs. And then you want to get short from a lower high or from somewhere, take some profit and leave it to run to the downside. That way you're hedged either way. You're in a trade. Yep. So at least a 50% retrace up. Yeah, 50% is very likely. Even the 61.8%, the golden pocket. So it looks like a lot today. Retrace all-time high to pass 786, then retrace to 0.5. Also 50-week moving average. Yeah, that 50-week moving average, man, it's 103. It's going to be probably about 102 or 101 by the time we get back up there. But be watching that 50-week moving average. Guys, if you want to put that on your charts, just go into your indicators and type in 50-week MA, and you'll be able to get that. It's this little indicator, 50-week MA here. You can throw that on, and it will get that on there for you. Okay. Yeah, someone loves to sell high and someone loves to sell high blood pressure. Yeah. What's up, Felix H? Welcome in, man. Good to see you in here. Yeah, YouTube really is addicting, guys. I mean, first of all, charts can be addicting, and that's why you do have to have balance in your life as well. A lot of traders spend too much time in front of the charts, and they end up over trading. So just try not to be that guy. Also remember, balance in life is important. Family in life is important. The whole reason we're trading is to make money to support the loved ones that we love. So, or to even have nice things. Let's just say it's not even that virtuous. Say you want to have nice things, have money to buy nice things and buy a nice house and stuff like that. Either way, your balance is important. BG, welcome in, man. Made 10 soul last night on rugs. Fun hope. Wow, that's pretty awesome, dude. That's crazy. And Baby Genius, thank you so much. In this wave 3 down, which looks right, what if our wave 4 goes above the wave 1 bottom? That means not impulsive. Yes. Okay. So in a 5-wave impulse to the downside, actually, I'll explain this right now with Elliott waves. So you have your general 5-wave impulse, right? and I'm just randomly throwing the 5 waves on here. But if your wave 4 overlaps with your wave 1, that invalidates the impulse. So the second, and also if your wave 4 hits the golden pocket of a wave 3, so you take your golden pocket from the highs of wave 3 to the lows of wave 3, and if you hit the golden pocket, it automatically invalidates it as an impulse to the downside. Then that means you can't be looking at impulsive structure. Now you're looking at this as a 3-wave corrective structure. And then you might reject from here, but you're going to expect a lower high before coming lower and seeing that kind of rounded bottom here. So with Elliott waves, you do not want to see overlap between the lows of 1 and the highs of 4. And also if the highs of 4 hit the golden pocket of this move down, it invalidates it as well. I hope that helps a little bit. Yeah. Dumping whole structure we built today right now. Yeah, let's look at, are we dumping right now? Yeah, we're starting to. I mean, guys, it does look like we could also be going into some little micro triangle in here. And remember, a triangle is just a continuation pattern, a continuation consolidation pattern. But I would be looking at, we are at the macro support of a pitchfork band. And let me zoom back out onto the daily. And I will tell you guys, especially in this pitchfork, which has been highly respected in the past, what happened here inside the pitchfork band? We formed a bit of a range inside the pitchfork band. Formed a range kind of on the top of the pitchfork band here. Formed a range inside the pitchfork band. Formed a range right below it, hitting it as resistance. Formed another range inside of it for a week or 2 weeks. These are the daily time frames. So these are week-long ranges, week, 2 week, 3 week long ranges, right? So we are down back inside of that pitchfork band again. It is very possible that at least over the weekend, we form a range in here. Or like this last time, actually this looks like it was a weekend as well. You can see we dumped into it on Friday. Let's come in here. So Friday here, the next day, I guess Saturday, you dumped into it. You kind of ranged for a bit inside of it before breaking it to the upside. So it's very likely that we at least spend the weekend within our pitchfork band structure. Sorry, let me get back there, guys. I know I'm all over the place, but it's very likely that we form some sort of range within this pitchfork band structure for the weekend and potentially wick down maybe Sunday to hit 78K. Because, Sunday for me, where I'm at in the United States, in other parts of the world, it's market open. In Asia, it's market open Sunday, midday to afternoon. So we'll have to see. We'll have to see what happens. I do think 78K is looking juicy down there. Okay. Yeah. You think we can see a missing small alt season in that ABC correction? Yeah, in that corrective move up, we might see a bit of an alt season, but guys, I really do think alt season is not going to happen. And I've been saying this in Jason's Discord for 2 years, and I've been saying this on my channel since I've opened it. I did not think we were going to see an alt season like we saw in 2017 or 2020 or 2021 or, whatever. But if we look at the total 3 market cap chart, guys, I was telling everyone when I first opened my channel, I think it was late November of last year. So it's almost been a year long since I've had my channel. Maybe it was December of last year I opened it. But when we were up here, I remember making a video saying, guys, I'm taking profit on some of my altcoins. And I got so much shit for that. People were calling me stupid. People were saying, we're about to see the biggest altcoin season ever. And you're an idiot. You're an idiot. Well, we were at macro resistance on the total 3 chart. And this was excluding Bitcoin and ETH, but it was all the other altcoins. And sure enough, we dumped all the way to the bottom. By the way, when we came down here and we held this arrow, this message has been on my chart ever since we hit this. So I was also expecting a rally from here. And we're breaking the pitchfork to the downside, guys. We're breaking our bullish structure to the downside. Sure, could we see a bit of a rally? We could even see after I think we might come down to take out these lows at 750 billion-ish. It would also take out your crash lows. So maybe we come down, we take those out. Do we get a rally all the way back up to back test that? And this could give you a pretty nice little 2-month, 3-month altcoin season, mini altcoin season. Sure. But then we might start to form a sideways range in here for a prolonged period of time. Potentially even coming down to take out your range lows, which is this little guy here at 660 billion. Let's pull our volume profile of this range. We're breaking the value area low of the range. So now that we're breaking the value area low of the range, if we close, this is our first daily candle breaking it, by the way. But if we close this daily candle below it, then we can suspect, and especially if we close the weekly candle below it, we can expect to go for some lows. Go for some lows, go for some lows. Take liquidity and maybe see a sideways range. You know, I really hope altcoins do get some sort of rally. We do get some sort of altcoin season. But the good altcoins did make new all-time highs, guys. XRP, Solana, Ethereum, Chainlink didn't make new all-time highs, but it got pretty close. It got up to 35, and 50 was the all-time high, I think. Sudeep, welcome in. I know that you changed the name changed to MMM Liban, but I know that's you, Sudeep. So welcome in so much. If Bitcoin moves up 10%, then alts might do 15 to 20. Exactly. So you can think of altcoins as kind of a leveraged play on Bitcoin. If Bitcoin's going to get a 10% rise, then maybe Solana and Ethereum get 20%, and maybe someone like Near or like Sui and Say get 25%, maybe 30%. But yeah, that's right. That's exactly right, Mark. I think so. I haven't checked the charts in 3 days. Short open, took profit once, and trade is free now. Awesome, man. That's really awesome that you are in a short trade. Let it run, dude. Let it run until you see a big sign of strength. But Baby Genius, absolutely. Thank you for that kind comment. I appreciate you being here, and glad you learned something. Guys, if you did learn something today, please hit the like button for me. Just helps the channel grow. I'm trying to grow a good channel, a good community here where we can all manage these markets and navigate these markets together. Yeah. Okay. Looking to finish my client funding test. Oh, cool, man. Yep. Well, once you pass it, that's going to be awesome. Just, make sure your risk management is good in that client funding account, that prop firm account, and you should be good there. That's why we love you. You keep it real. Most of the noise on YouTube is because people want bullish upside. Then it's your fault for just trying to teach us and help us. Yeah. Baby Genius, thank you, man. I do try to give you guys really, I hold nothing back in my live streams. I let you know exactly what I'm thinking. And don't leave anything behind a paywall or anything like that. Now, the Telegram community, you have to sign up on BYDFI to join, but that's because it's kind of BYDFI that's running that Telegram community in partnership with me. But really, the money you're depositing into that community is your money to trade with. So all you're doing is using their platform, and it's a way to incentivize getting traders onto the platform. So, but yes, thank you, man. I do try to be here for you guys and just let you know exactly what I'm thinking. Don't forget, most alts hopium come from the COVID period. Yes, that's a good point. So Mark makes a really good point. We had $6 trillion injected into the total money supply of the United States in 2020. And of course, some of that money is going to make it up into the markets, especially into the crypto market. Was kind of a brand new asset class, an emerging asset class. And those pumps that we saw, first of all, you got to remember the market caps were a lot smaller back then. So it takes a lot less money to pump them 1,000, 2,000, 3,000%. Well, now that the market caps have kind of matured a little bit, especially on some of the bigger altcoins, to see those crazy kind of pumps, you would have to have billions of dollars come in to get them that high. And it's just not likely we're going to see that kind of crazy blow off top rally like we saw in 2017 or 2020. Let's see here. Let me Anime Coin TA, please. Yeah, we'll check Anime Coin. Sure. Cryptos R Us is still calling for higher prices. Dang. Well, it's a possibility, guys. There is still one bullish scenario here that we can look at. This ABC corrective move in a flat, and then another new all-time high coming in. another push up. But first, we expect more local downside before seeing that push up in one last impulse. We're all George, yeah. Hey, Divine, can you show your macro pitchfork setup on Bitcoin real quick? Yeah, so there's two main macro pitchforks that I'm looking at, Garage 30. And one of them is this macro pitchfork. So you're going to, let me zoom out to the weekly time frame. On the weekly time frame, you're going to pull it from the COVID lows. And remember the COVID lows, because that was a giant black swan event. Yeah, I know it wasn't the lows of the cycle. It kind of was the lows of a mini cycle, 2020 lows, your March 2020 lows. You're going to pull it up to your 65K highs. Now, not the 69K highs, the 65K highs, because as far as volume and money flow, that was the top. And you're going to pull it up to 65K highs, and then you're going to pull it down to the bear market lows. And then as far as your pitchfork goes, that's going to be a skiff pitchfork. And, you know, I just have these three ones marked on here. Now, that is your multi-cycle pitchfork, where when we rejected from the midline on the all-time high, we got a dump. We still haven't made it down to the bottom of the pitchfork band. Let me hide this fib time real quick. You'll see that at the bottom of the pitchfork band is your 70K golden pocket. There, 70K golden pocket at the bottom of the pitchfork, and look at your prior range value area highs right there as well. So that 70K area, man, that's going to be juicy for at least some sort of bounce. That is one of the macro pitchforks. Now, the other macro pitchfork I got is this pitchfork, which is an unconventional pitchfork, but it's so highly respected that we have to leave it on the charts. So that one, let me just hide these, is pulled. The very first pivot is going to be pulled from your June 2021 lows up to your 69K highs, down to your bear market lows. And that's going to be an original pitchfork. And you can see it's a sideways pitchfork, but look at how nicely it's been respected. Rejected the lower band, got a higher low, flipped it to support, formed a range above your midline, took some liquidity of the lows of the range with this little low, pushed up to the upper band, rejected the upper band many times, rejected the bottom of the upper band, continued making new lows. Then we pushed up to the top of the pitchfork, two perfect rejections from the top. You dropped to your lower part of the upper band, and then you had your distribution at the top again, and now we're at the lower band again. So just highly, highly respected on high time frame, kind of swing lows and swing highs. Okay. Market is maturing. That is why not so explosive highs. Yes, the market is maturing, and that's why we're not getting such explosive highs. If real gold moves like this, we are nuked. Yeah, I sure hope real gold doesn't. Let me check out gold real quick, and we'll check anime coin, I promise. Gold is still holding up relatively well, guys. I still think gold could make it up to 5,100 before seeing a bigger, like 6-month correction or so. Yeah, because gold is in like a large, large impulse here. But even looking from the what is that? No, 2015 lows. That's the impulse we're looking at. And yeah, coming up to that 2.618 would be interesting. Did we reject from the 2.0? No, but that was a nice little rejection for a while. It is starting to top out here, but there's no bear divs on the monthly time frame for gold. It's kind of a triple top in here, but look at the money flow, still going up aggressively. And this candle's probably going to close. What is going on with this? Interesting. Yeah, that candle's probably going to close green, or at least like a doji. It is unlikely to see under 10K. Yeah, I don't think we're going to see under 10K, guys. I don't. Everything's bullish unless it drops into negative territory. Yeah, my target for this correction is going to be negative 6,000 on Bitcoin, and I'll buy some at negative 6,000. I mean, they're going to give me $6,000 for every Bitcoin I take. Wouldn't that be fun? Pitchforks, Garage 30, I agree, man. Pitchforks are the best part. I love pitchforks so much. They work so god dang well. I mean, you can even look at lower time frame pitchforks, guys. Remember, we were looking at that low time frame pitchfork earlier this year or earlier last week. Bearish pitchfork pulled from the all time high down to your 103K lows up to your 116K high. And we were looking at that original pitchfork. And no, it was not an original, it was a modified skiff. I mean, we were trading perfectly within it in the bearish trend. You know, bounced from the midline, rejected the upper band, bounced from the lower band, rejected the upper band, bounced from the midline, rejected your VWAP, but we broke it to the downside now. So, and by the way, on a wave 4 retrace, you could be looking at 89K. It's 89K is going to be the bearish backtest of this pitchfork. And also, it's going to be the top of this pitchfork band. 89K to 90K is looking like an important little resistance above us. Yeah, Trump brings uncertainty to the global economy. Uncertainty drives investors to gold. As long as Trump's in the Oval Office, gold will keep flying. I agree, Mark, with that. And it's even more than that, guys. It's not just Trump in the United States. The whole world is printing money uncontrollably. They're injecting stimulus, devaluing their fiat currencies. Not just the United States, but other countries around the world are devaluing their fiat currencies by printing. And all printing is hidden inflation on the citizens, on the people. And so a lot of people are becoming wise to that. And a lot of companies are becoming wise to that. And they're starting to put their money back into hard assets, you know, precious metals, gold in particular. So gold has likelihood to continue pushing up higher as long as there's macro global uncertainty in markets. And especially in the United States, with us having $38 trillion in debt, getting higher and higher every single day, talking about turning the money printer back on again, or talking about cutting rates, which could cause inflation to spike again. We have so much just bearish sentiment about fiat currencies right now that a lot of people are moving into gold. So yeah, gold's a really good investment, and even silver and like just precious metals in general. Platinum, I know platinum is, some people like to accumulate platinum, but Mark Dutch knows what he's talking about there, guys. Funny thing, oil was once in negative territory. Yeah, that is wild, huh? Much HK oil in negative. Yep, yeah. I agree with you 100%. Mark Dutch, that's definitely. Gold is a safe haven for sure. For president, Divine Hood for president. Man, I wouldn't even want that job. Yeah, 38 trillion is an absolutely insane number. And guys, I think on the Fed's website back in 2020, when they printed a shitload of money, $6 trillion, they discontinued the chart for the M2 global money supply because it was like this. It was going up, it was going up, it was going up. And then it was like this. And then it was just crazy. It had 30, 40 years of like a steady increase, but then they printed 46% of the money supply overnight. And it was so ridiculous looking that they took it off their website. I remember the week they did that. It was like, what a joke the Fed is. Like, it's just crazy. Remind me how you set up your anchored VWAPs. So just you grab you grab that anchored VWAP tool. It's favorited here, but let me see, where is that anchored VWAP tool? It's in one of these little tabs over here. It's right here, anchored VWAP. It's in the volume-based tools. Your fourth tab to the downside. And anchored VWAPs, you want to set those up from a key high or a key low, a key swing position, right? So if we zoom out on Bitcoin on the daily time frame, this 74K low was a very important low in the market. And so you can take your anchored VWAP, you just throw it right on that low, and it's going to close where the candle body is, or it's just going to close where that candle's at. And you can see that anchored VWAP is always going to be a very key spot where there's going to be, touches. And in a trend, you generally, if your trend is going to remain bullish, you'll bounce from it and then you'll make a new high. You'll bounce from it, you'll make a new high. The second you start to lose it, your trend is switching to a bearish trend. You'll often reject it on a back test and start the bearish trend. So yeah, you just take that anchored VWAP and you just place it on a key high or key low. And now, we were looking at the anchored VWAP from 49K. We broke that to the downside. That was this anchored VWAP right here. And we even have our anchored VWAP from the bear market lows now on the chart. Let's see. Let me get rid of this now. But that's a very interesting anchored VWAP right here from 38K. Now, guys, that is an interesting anchored VWAP because this was right when BlackRock, I think BlackRock filed right around here, and then the listing actually occurred here at 38K. So that is a very interesting anchored VWAP where we're stopping at right now. Okay, I will do anime coin. Crazy thing is that people still think we're good. Yeah, people think we're good, and people think money printing is going to be another good thing. It's just crazy. Anime coin. Okay. I can't believe they're, oh gosh, this is wild. Okay. It looks like it's a newer coin. Let's do Bybit. Is this the right coin is the question. It looks, gosh, it looks like a rug, to be honest. I mean, I see a pretty nice steady downtrend in here. You're even breaking those lows, though. You're coming down to the bottom of the channel right now. So it's after this major dump kind of ended. Now you're starting to form a nice little channel. But look at this on Anime Coin in this channel. You were in the upper half of this channel here. And then after the dump, now you've been grinding in the bottom half of the channel. But you could come down to take out those lows. Because if we look at your dead cat bounce from the crash lows to your dead cat bounce highs, and we turn on our golden pocket, and we have to put that on log scale. You've broken you actually bounced from the golden pocket once right there. So you bounced from your golden pocket, but you made a lower high. And now if we turn on the 786, are you hitting the 786? You've even broken your 786 there. So bounce from golden pocket. I think now that we haven't closed the daily candle below the 786, and it looks like you had some buyers stepping in today, probably just because we're at the bottom of this channel. You do have some bull divs on the daily time frame. You can see here lower lows on these two lows, higher lows here, and the money flow looks like it's starting to come up. Money flow starting to come up here on the daily time frame with this daily bullish engulfing candle. Even if it closes with that big ass wick, it's going to be a bullish engulfing candle. You might be able to get a move up to the top of the channel. But geez, what I would look at now is pulling your Fibonacci or your volume of all the price action after the crash. Yeah, until you can get back inside of this volume profile, until you can get back above 00742, you might continue to kind of just grind. You know, see, I was grinding down, hitting support, grinding down. You'd see a little bit of a bounce, grind down. You might continue grinding down until you take out this low at 0050. Let's zoom in on this just a bit. Yeah, you can also just look at this bottoming range here. Kind of, you're starting to go sideways here. And you're at the value area low, but you tried to wick up. What you did though is you wicked up and you grabbed this liquidity, and now you're way back down. So that could be a bad thing. Remember, ICP did that, and it looked really bad. You just SFP'd the liquidity, had people sell off as soon as they broke that high. So to me, it looks like people are just selling off when they get a chance to sell off right now. If you close your daily candle back inside of this 00693, you might be able to at least work your way up again to the channel midline. Oh, man, that's tough. Look at this huge buy came in the last 2 hours. Yeah, you do have some nice bull divs here. I mean, you can see all through this little channel down, lower lows, and now you're starting to get these higher lows here. Money flow is finally bottomed out and is starting to curve to the upside. NAMI as well. You have local bull divs between the two lows here. Money flow crossing into the green. So you might be able to get a bit of a move up, but be aware because as soon as you grab this liquidity, you dropped right back down. And that is a trap. You'll come up, you'll take liquidity, and you'll drop right back down. So if you close your daily candle inside this small volume profile, you might be able to get a move up, POC, or even to the channel midline. Value area high is a bit above the channel midline, but I would just be trading this. I'd be careful with these coins, guys. They are super low liquidity and just dangerous. I mean, like one person sells off, this thing could nuke 50%. Like one big whale sells off, this thing could nuke. So I don't know if you're buying at spot or if you're not, but a good level to buy spot is if you SFP these lows at 0050. SFP those lows, you could buy some spot. Okay, let me get back into the chat here. Gosh, where was I? Okay, yes. Crazy thing is, yeah, Jawfield, did that help you at all with the anchored VWAPs? Let me know if that was helpful at all. Would you talk about the different styles of pitchfork? Well, there's just 3 main styles of pitchforks. Well, there's 4 actually. There's an inside pitchfork too, but in your pitchfork, whatever your pitchfork is going to be, you're in a bullish scenario. You want to pull it from a low to a high to a higher low, and that's your bullish trend, right? So you're going to be looking at the trend though. Let me show you a good example of this. In Bitcoin, say we're at the beginning of the bull market. Hold on, let's go to the 2-day time frame. You're at the beginning of the bull market down here, and you're looking at starting a nice, good uptrend to the upside. So you can take a pitchfork from your wave 1 low to your wave 1 high, even though that was a flat, that's the high of, and this is a flat correction, and then you take it down to the low. Well, because you're looking at now busting out in a wave 3, you're not going to want to use a skiff pitchfork because skiff is like a sideways. It's starting to get towards the end of a range. That's when you look for skiffs. But you're looking for your wave 3 top here. So you're going to want to use the most aggressive upward pitchfork you can get. So an original pitchfork. And look at this. You pretty much did get to the top. You front ran it just a little bit. But then, for instance, our wave 3 pitchfork here, we pulled it from the bottom of 3 to the highs of 3 to the highs of 4. Within your 5th wave, you're looking for your 5th wave to end. Now, Bitcoin in general likes modified skiff pitchforks a lot better. So if you pull it from the lows of 3 to the highs of 3 to the lows of 4, and you turn on modified skiff pitchfork, which just shifts it a little bit. Like, look at, so here's your modified. Actually, this one was a skiff because in a wave 5, you're looking for your top to be around the top of a skiff pitchfork. Now, Bitcoin, sometimes with its volatility, will modified. It does like modified, but see how this is pretty aggressive. This uptrend here is still pretty aggressive. But because we've already had our aggressive move in the cycle, we're not going to be looking for such an aggressive move again. That's when you're going to shift it to a skiff pitchfork here. And that skiff pitchfork is going to give you your potential top for a wave 5. And sure enough, your top for a wave 5, here you go at the top of the skiff pitchfork, right? Now, if we're going to start an aggressive downtrend, like a really aggressive downtrend, it's a little bit, because this was a high here, you took out these highs, it's a little bit messed up here because you generally want it to go from a high to a low to a lower high, something like this, but this is a higher high in here, and that's going to make it look like an upwards trending pitchfork, even though we're looking for a downtrend. But you could still use the original, and if this was a lower high, you would see it's a lot more aggressively downtrending. We would want that to be a lower high there, and you would be able to really get some nice downtrending targets on that. But we're looking for an aggressive downtrend because it's the start of an impulse in a potential bear market. Even this, though, look at even this pitchfork here. If we zoom into the 4-hour chart, look at how nicely it's being respected. And this is the pitchfork I was showing you guys earlier in the stream. Bounced from the lower band, rejected from the upper band, bounced from the midline, lower band, midline, and then now we're breaking it and flipping it to resistance coming down. So the type of pitchfork just depends on what kind of trend you're looking for. And it's helpful to know Elliott waves a little bit to understand what type of pitchfork you're looking for. But at the beginning of an impulsive move and you're looking for a wave 3, you generally want to use an original or a modified skiff pitchfork. If you're looking towards the end of the move, the exhaustive part where you're starting to channel, you're starting to see that channel, you're going to want to use a skiff pitchfork. But generally, Coons calls this the trend and turn methodology. So in an impulse, you get your slow grindy, your 1-2s in here, you get your big third wave, and then you start to get that channel towards the end, that selling exhaustion, right? This is selling exhaustion in here. And you also have that little bit in the front. If you're pulling a pitchfork from this little spot here, you're going to want to use an aggressive one to get those highs. And even your wave 5, if it's a very aggressive pitchfork, your wave 5 can end at the bottom of an original pitchfork. God, I hope this is making sense. But when you're starting to get up into this territory, even if you're pulling a pitchfork from, like, say those are your 4 5s in there, you're going to pull it from this low to this high to this low. You're not going to use a modified or original. You're going to use a skiff because this is starting to get exhausted in here. So you want to use a weaker trend. And that's when you can go into skiff pitchforks. Skiff, shift, I don't know, whatever it is, guys. The name is not so important to me. The moment Fed go turbo mode on the money printer, we are doomed. Yeah, I agree, man. We are going to be doomed the second they turn on that money printer again. Now, we might have a couple years of some euphoria and some, short-term bullishness, but overall, that's going to really destroy the economy for us and our futures and for our kids. Yeah. Would you talk about? Okay, did that. Secret levels, Decrypto. I mean, I guess this is a secret level that I didn't know about. Brother Joe just showed that to us there. That's an anchored VWAP from the 38K lows. But really, all the levels I give you are the levels I'm actually watching, guys. I do not really have secret levels. I share everything with you guys. But I'm looking to come down to 78, between 78.3 and 77.3. Really, that's a major level. Now, the pitchfork, we're at the pitchfork support right now, and we could see a bit of a range in here for the weekend. 1 minute bullish flag. Yeah, 1 minute bull flag. Oh. Well, I see what you mean. It was like this 1 minute. Now it's going to break up here. I mean, overall, you are in that ascending triangle, and that might break to the upside. So you have your little ascending triangle. I can't even get that high there. There you go. There's your ascending triangle that you're seeing right now. So you had a fake out of it. If you can get back inside of here, you're probably going to break it to the upside. But if we reject right here, you're going to drop back down. See, we lost it. It could be a fake out. If you get back inside of it, you're probably going to come take out these highs. At the very least, maybe even come higher. But if you reject here, you're probably going to come take out at least the second pivot of the triangle. Don't share this channel out to anyone else. We got to keep Divine Hood our own little hidden gem. Yeah, Mark, I do like the smaller, we get to talk more and we get to have more, I do want to grow, and I do want to grow because obviously the more you grow, the more money you can make off YouTube and the more money you can make off like affiliates and stuff like that. But in some ways, I do like this having a nice little group where it's more like, I don't want to say intimate, but more personal and more, I love all you guys in here. You guys are all awesome, and I appreciate all of you guys so much. Really kind too. I get some haters in here every once in a while, and that's all 100% they're right. And I don't let that affect me, but I really do appreciate you guys so much. Palladium, platinum, aluminum, actually. Yeah. I mean, metals in general, man, and hard asset, like even real estate. I do think there's going to be a real estate crash. Like we're already seeing it crash 20% in some spots. But man, everything is just effed, guys. Like everything's just effed so much. Okay. All COVID relief literally make things stay afloat on paper, but it just ended up making the next crash even harder. Yes, and if they print money again, it's just going to compound that crash as well. I really hope in some ways they don't. Okay, support for Link was held. Let's check out Link here. On Chainlink, yes, it did get held there. Let's go to the 8-hour chart. Yeah, that's the value area low. And was that our 886 or it was a daily level, I think, or a monthly level? No, weekly. Yeah, weekly and your value area low here. Now, you are coming down to that value area low. You might make one more low to actually hit that value area low, but it is the value area low of the range, and generally you don't slice straight through it. You'll start to bounce around it a little bit, like Solana just did. If we look at Solana, Solana is at the value area low of its range, and it is starting to bounce. And look at, we're in a pitchfork band too, so we might see even a little bit of a small bounce to come back test your point of control, like range in here for a bit before seeing a drop to the bottom of the pitchfork. So as far as Chainlink goes, now Chainlink, guys, is a bit concerning for me that we might drop to like $9.93 because if we lose this value area low, we do have some liquidity resting around like $11, really $10.93. And we do have a couple levels down there, you know, a daily level, I think it was at 1165. I mean, that daily right into that liquidity grab is kind of nice. You would expect some sort of bounce there. So like if we lose value area low, we're probably going to dump straight to here, grab liquidity, bounce from the daily, and we're going to back test value area low. Now, if you reject there, you're going to come down. So that could be a nice scalp from $11 or $10.93 up to, you know, $11.50. Depending on how you play that as a scalp long, I mean, that could still be a really good risk reward ratio just for that little scalp long opportunity. You know, say you grab the liquidity right on that daily, wherever that wick ends, you're going to put your stop wherever that wick ends, and even just bringing it back to back test that. That's a 3.7 risk to reward ratio. That's a nice scalp. I mean, anything over a 3-to-1, there you go. And then you could take 50% there, but if you break back inside the volume profile, you might be able to work your way up a little bit higher here. So, but if we lose the value area low and start to really close like daily candles below it, that is when I do think we could get that drop down to 993-ish. 992 is our macro logarithmic golden pocket. So zooming out onto the 2-day time frame, I mean, this is a really nice level for me. Let me turn off these weeklies. And because, so if we're looking at from our bear market lows up to this cycle's highs, and we look at our golden pocket. So in our crash, this was December's highs, by the way. And that might be the highs for altcoins for the entire bull market. But we saw a multi-month corrective move to the downside, and look at where we ended. We ended at the bottom of the pitchfork, which is to be expected. Wick passed it a little bit, but I wish we would have wicked a little bit lower because you had this internal liquidity grab, which is important. Even though it's internal liquidity, it's important because look at this big imbalance candle right afterwards. So you saw a lot of people longing right in this area. They're going to put their stops below that low. And also, it front ran your macro golden pocket. Your macro golden pocket was just below. So you front ran liquidity, you front ran a macro golden pocket. Because of that, we might come down again to actually hit into that macro golden pocket. Take the liquidity of not only April's lows now, but those lows as well. Dual liquidity grab into a macro golden pocket. And once again, that golden pocket is from the bear market lows up to your cycle highs. You can see that golden pocket is right there. $9.94, $9.93. Depending on how I get there. Yeah, $9.94. So seeing that liquidity grab into that area could be a nice little, at least a bounce up to make a lower high before making a lower low. If we're going to start that, or if we're going to keep ranging within this sideways range. Remember, this is just a big sideways range we've been in for 2 years. Going back to November of 2023. So a 2-year long range. We're in November of 2025. And anyways, towards the value area low of a 2-year long range, you should start at least looking at long positions. Now, you want to wait for a sign of strength, but you should start looking at long positions. Let me get rid of some of this. And if you come down to take out your range lows, or you could actually consider this $8 your range lows, but you could look at this whole thing as a 2-year long range, and then we could even be looking at kind of this part as well as a range within a range. So if you come down, you take out those lows into a macro log golden pocket, that could be really nice. So needless to say, that 994 to about 935, 936 is going to be a really nice support level for me personally. Can it go lower? Yes, it can, especially if Bitcoin continues to dump to 70K. If Bitcoin dumps to 70K, Link will come down to $10. But we are at the value area low. We are at a weekly level, and we might see a small bounce from here. Now, remember last week we were looking at the point of control in confluence with the bottom of the pitchfork. This was the level we really wanted to see hold on Chainlink, and we lost it. So now that we're losing it, if we bounce from this value area low weekly, we now have to watch for the bearish backtest of not only the point of control, but of the pitchfork. If we come up here and we start to reject, it is likely you will come lower because you're breaking your bullish trend. You wanted to see that bullish trend hold and a bounce there. Because we didn't, you might bounce from value area low, bearish backtest. Now you come down to your real support level. So what you could even be looking at is longing this value area low at 1150 and bringing it up to $13 or $14, 14.3-ish. And that would be a real nice scalp. And then you could short 14, bring it down, and it might hold. And if it holds, even if you reject from this area here, technically you would be breaking some market structure bullishly on lower time frames. So then you could pull your golden pocket from the low to wherever that rejection is and look at this golden pocket 786 as a potential higher low support level. Because we could do this, reject, higher low, and then we get back above the POC and we start to see a bigger rise in here. What's likely around these value area lows is you do generally chop for a bit. So we might reject POC, come down, see like sort of a double bottom or even grab liquidity, and then, range for a bit and then maybe try to get back above. Or range for a bit and then dump into your major support level. We can keep an eye on Chainlink. We will keep an eye on Chainlink as the days and weeks develop here. Because Chainlink is one that I've been accumulating this whole bull cycle. I bought some at $14 earlier this year when we came down here. I bought some at $11 earlier this year. And I plan to buy at $10 again if we get down there. And I'm willing to hold it for years if I have to, because I think Chainlink is one of the good projects that has real use case, real value. And as far as my long-term spot portfolio goes, I am okay holding it underwater if I have to. Wait for the next bull cycle. Yeah, so that is Chainlink. Okay, stop abusing my 2-day weights. 2D weights. Let's see. Crypto Lifers should join George in jail. Yeah, well, okay. Sui weekly RSI 32. Sui. Yeah, the RSI is at 32. I mean, your momentum wave's at negative 72. That's pretty deep. Last time we came down that low, it was towards the bottom. Look at that. Last time we came down that low. But here's the thing. We're at the bottom of the pitchfork. If we close our daily candle below this pitchfork, we might come a bit lower. And we're right at it pretty much. Now, here's the thing. We are looking at a potential zigzag correction here, right? To come down to your golden pocket. You had your impulse up. Impulse up. If you get that zigzag correction, your golden pocket's often the area where you end. You can also see there's an order block in there, a daily order block in there. But if we look at a trend-based Fibonacci extinction from the highs to the lows, oops. And we look at that 1-to-1 to the 1.232. Look at where your 1, 2, 3, 6 is. And we're at the 1-to-1 right now, guys. So in an ABC corrective move, the 1-to-1 is at the bottom of the pitchfork. Man, this would even be the only reason I think we might break it is because our money flow looks like garbage here and we have no bull divs. If we had bull divs at your 1-to-1 corrective zone at the bottom of a pitchfork, I'd swing long this right now. But we don't see confirmation. So now we have to look towards the next major level. And what is the next major level? Really 109 to 108. Look at that. Your 1.236 is your next most common target for a corrective move. It's also your macro logarithmic golden pocket, and you have an order block in there, your big daily order block in there. So this could be impulse, correction to make a higher low, and then another impulse up in a super cycle, or even if you're going to see another impulse, corrective move, and then it's going to make a lower high, and it's going to be a larger, complex correction that lasts years, you're still looking for some sort of bounce in here to come up a little bit, maybe to back test this general area, which would be your pitchfork midline and your value area low of your range that you're breaking down from. Now, that value area low will shift lower and lower if we spend more time down in these lower parts, but we'll take a look at that as the price action develops here. But yeah, 109 to 108 is looking pretty dang juicy here. Actually, it's like 109 to 104, let's say, is looking pretty dang juicy. Now, say we do wick, close a couple daily candles, like today's daily candle, and maybe over the weekend we kind of range below this pitchfork, and then we get back in it and we flip it to support. That's a good long right there. Right here, when you flip it to support on the back test. And you could be looking for your stop to go below those lows, and you could be looking to target that value area low bearish back test again, or the pitchfork midline, wherever that's going to be. And that would be a really nice swing position, because it would be a fake out of the pitchfork, and then you're back inside of it. If you're back inside of it, you expect to at least come test the lower part of the band, and that's still a 3.5 to risk reward ratio there. Obviously this is a hypothetical low right now and a hypothetical trade, but yeah, so we'll keep an eye on that as well on SUI. SUI's looking pretty, I like SUI. Let's say I like SUI. It's a good project. It's got good fundamentals. That's why it's one of the coins that I cover in my videos where I cover the altcoins with Bitcoin. But coming down here would be really nice too. We would have to watch for, if we come down here, we would have to watch for a bounce, rejection from this, and then continuing down. So, if I long this, I would look to at least take some profit around 134, 135. If we start to come up here with local bear divs, I'll look to take profit. And that's where NAMI can be really helpful, guys. NAMI and Market Cypher B. Because if we're grinding up here slowly, maybe it's a 3-wave corrective move up here, and we're making some low time frame bear divs, I'm going to take some profit here, and I might even look for a short. Okay, Crypto Wanderer, thank you so much, man. I appreciate you. You're the man too. I appreciate all you guys so much. Yeah, Jason, I love Jason, guys. He's really awesome. I actually was part of the Casper crew for 5 years. I'm still in there. I posted in there today. I love Jason. Me and Jason talked about doing a collaboration sometime in January, I think. We're going to try to do a collaboration, so that'll be real fun. I've learned a lot from Jason. Jason's an amazing trader, guys, and he's an amazing person, too. Bitcoin also bounced off the 800-day EMA. Okay. EMAs can be very helpful, and an 800-day, that's like, what, the 4-year? No, that's like a 2-year cycle. I wonder if they're... Bitcoin runs in 4-year cycles. So I wonder if there's like a, whatever 365 times 4 is, that EMA, and we could put it on the daily and see if it's respected. What settings would you have for the pitchfork? So the settings I use for pitchforks is just putting in the 0.5, and those are these light green lines, and then the 0.618, which is a golden pocket, and that creates your upper and lower band. You see those two, 0.5, 0.618, 0.5, negative 0.618. These create your bands. and then you just have the midline on, and then the 1, which is the top and the bottom. And that's all I use. I turn off the background. So that is your settings for it, and that'll give you your upper band, your upper band, your lower band, your midline, and of course your 2 top and bottom of it. Okay. I meant that your TA is unique, so are all your levels. Yeah, Decrypto, absolutely. It is a unique TA. I've kind of taken a combination. So I've never actually had professional training as far as TA goes. Well, I guess I would say it's professional because I consider Andy from Bitcoin Census a professional trader. I can consider Jason a professional trader. I consider Coons one of the best Elliott Wave traders in the entire world. And what I've done over the years, very similar to what Mark Dutch does, is he's constantly watching live streams and constantly learning and picking up bits and pieces of information. And I've kind of now pitchforks I've developed on my own. Like pitchforks with Elliott Waves, no one taught me that. I just developed that on my own. But with like Elliott Waves, everything I've learned from Elliott Waves, I pretty much learned from Coons and a little bit from Andy and DeWald, who's part of Andy's group. The order flow. CVD and open interest. I learned this from Jason. I didn't know this really well before. I knew it very like surface level before Jason, but Jason taught me a lot of this stuff. So what I've done over the years is I've just learned and learned and learned everything I can. I learned about order blocks, smart money concepts, just learning different tools of the trade, learning about anchored VWAPs, learning about volume profiles. Frankie Candles is one of the best volume profiles traders you will ever see. And I've learned from these people, and I've taken bits and pieces of it that work for me, that I find in resonance with my style of trading. And I've pieced them all together to kind of create my own unique style. You know, I use pitchforks, I use volume profiles a lot, I use Fibonacci's a lot. And once I figured out a style that worked for me, I kind of developed it into my own kind of Frankenstein TA strategy, and it works for me. You know, it works for me. And find something that works for you. Develop something that works for you. And just once you get that down, it's about discipline and risk management. But yeah, thank you, Decrypto. I appreciate you so much. Thank you so much, man. Jason is realistic and down to earth. Like I said, yeah, he is so funny too, man. His raps are the funnest in the world. And just his jokes, you know, I love the guy. Love the guy. But thank you guys all so much. I appreciate you guys. Yeah, haters are usually just disappointed traders. That's for sure. Oh, nice. Felix, you buy a plot in the French Alps or English countryside and be self-dependent. Yeah, dude, that sounds like a banging life, man. Especially, dude, being alone in the mountains, having some time for yourself, skiing, you know, that's a hobby you can use so that you don't go crazy. Sounds amazing. Guys, we might close the daily candle at the bottom of this pitchfork. We'll see. U.S. stocks average PE is 38. Gosh, dude, that's crazy. Price to earnings ratio is 38. Yeah, guys, we are in a crazy bubble, I think. Lucas Free 77 or J Lucas Free 77. God bless you too, man. And thank you for being here. Mark, you love the rain. Interesting. I'm not so much of a rain guy, but you know, I do love nature and I do love that smell. What do they call it? Petrichor, when it's about to rain outside and it smells so fresh and good. God, I love that. Divine Hood's real name is Satoshi Nakamoto. No, well, no, it's not. I wish it was, because I would have a lot more money. Brother Nature Joe, absolutely, man, and I'm glad you're learning. And guys, if you are learning anything, please do me a favor and hit the like button just to help spread the channel, help it grow here. But I appreciate all of you guys so much. Like, I love being here with you guys. I love going through the TA. I love just chatting with you in the chat. Yeah, I'm a sunny places guy myself too. Bluebird Power Day is the best. Yeah. Okay. Yeah, I think 78K, that dip to 78K would form some nice bull divs too. Now, especially if we get a bounce over the weekend, if we get a small bounce over the weekend, and then we come down to there and we could develop some bull divs on the chart. Even if it's a day, like, man, I don't think we're going to have enough time to develop a daily bull div on the chart, but if we look on like the 4-hour chart, getting some nice bull divs on the chart into that support level should give us at least a wave 4 corrective move that could last up to a couple weeks, like a relief rally for a couple weeks before coming down to 70K. And remember, the lows, that 1.618 or the 0.618 fib time is all the way in May. So we could be in a downtrend all the way until May, guys. I hate to say it, but we could also throw on that 0.5. Let's go to that trend-based Fibonacci extinction or time. Let's see, is that it? No, that's not it. Where's that? Not trend-based. Dang it, did I delete it? You can take your trend-based Fibonacci time, which is, where's that? Trend-based fib time. You're going to go from the low of the impulse to the high of the impulse, and you're going to double click it on the high, and that's going to give you your corrective time frames. So you can see your corrective move, you want to at least make the low after the 0.382. And now technically we have, with the lows of yesterday and today, we're after the 0.382. But another common area is halfway, right? So if the impulse lasts 2 years, the correction can last 1 year. It's half the time, because what you're measuring is this took a certain amount of time, and your corrective move generally takes, in some correction moves, it takes a 1-to-1. The corrective move is as long as the impulse. But with Bitcoin, we know it's a 4-year cycle. 3/4 of the cycle are a bull market, and 1/4 of the cycle is a bear market. So, or even like it's a 3-year move and like a 2-year corrective move. But let's see, what was this? This was 791 days. 791 days. And we might see around, what is that, February, late February, February 23rd or so. Around that, we could zoom in and find the exact day. But that third week in February, we could be ending this corrective move as well. You know, say we bounce from 70K, we get a lower high on the charts, and then we come down and get a lower low crossing into that 0.6 or 0.5. Maybe in February, we're going to get a push up, or in May. This is going to be in late May. That would be the summertime. Now, I know in the summertime, a lot of the big traders kind of take some time off too. So as far, yeah. Okay. Dang, Mind Tapestry. I'm so sorry. Do I have a pitchfork tutorial? You know, I've been asked that so many times, and when I was in Jason's Discord community, I would stream in there, in the Discord community for a few months, and people asked me over and over, and I said, guys, I think I'm going to wait until I make my own channel or my own community and leave that for them. And then I made my own community, and I still haven't made it. I want to make it really professional, and I want to make it really good, because pitchforks are my bread and butter. So I want to have good editing on it. I want to have good, make it like a real professional, like a Tom Crown video. You know, he is really good at editing and making his stuff look pretty, but I don't know how to do that stuff yet. And so I've been waiting on making that pitchfork tutorial video until I learn some more of that stuff. But I need to make one. I'm sorry, I do not have one. I need to make one. I will make one. I promise you guys that. I don't know when, but I will. But for now, I can kind of guide you guys through those pitchforks on the live streams. If you have any questions on them, just let me know. I'm more than happy to answer them. Yeah, Andy and DeWald are cool. And I know, Bark, you've been with Andy for a while, and I know you've also been with Coons for a while. You know, Mark's the best, dude. And by the way, Mark, I'm not flawless in Elliott Waves either. Actually, I think Andy and DeWalt are better at Elliott Waves than I am. By far better, you know, and I'm still learning. Like Elliott Waves, in order to master Elliott Waves, I think it's like a 4-year process to really, really master them. And then, of course, Elliott Waves can be very subjective too. You know, like I know some people that are not looking at this as a 5-wave impulse, but they're looking at a double 1-2 in here, like a 1-2-1-2. This is your big 3. 4-5 here, and maybe now this is the end of the bull market and we're going to go down. You know, I think Coons is even looking at it like that. So it's a little bit subjective, you know. Imagine, yeah, you know what? Lily, me and Jason used to trade together all the time in his live streams. When he was doing his live streams back in like 2022, he would do a live stream, and I'm a mod on his channel, but in his Discord, we would me and him would primarily post, and even though I wasn't a coach in there, me and him would do a lot of fun trading stuff together. It was pretty awesome. Yeah, I wouldn't say this is a pump, guys, but we are getting a little bit of a relief rally here. Okay, I want to yeah. I understand, Felix. I understand. I want hey, at least you have a plan, right? You can't buy right now, but at least you have a plan and something to work for, Felix. So that's great. And just work for it, keep grinding, man. Keep grinding, keep learning, keep don't give up, and you'll get there. It's probably going to take longer than you want. And it is, even with me myself. It takes you longer than you want. When you first start trading, your account is small, and if you're using good risk management, you're growing your account slowly for years. But then once you hit that certain level and that exponential growth curve starts kicking in, because you're making 1% of $500, 1% of $1,000, 1% of $3,000, 1% of $5,000. Once you start getting to like 1% of like $20,000 and more, that's when you start to build that really nice, you can live off trading almost. You can live off the profits of trading. So it's going to take a while, though. That first couple years in that curve there, in that exponential growth curve, it's going to be slow and painful. And yes, it's not going to go straight up like that either. It's going to be like, even if you're a good trader, it's going to be like this, so yeah, just know that, Okay. Yeah. 20 ISO 2022 coins might go to 0 next week. Banks don't need algo, XRP, HBAR. Man, if XRP, I think there's a lot of big money and political money behind XRP. So I don't see XRP going to 0. But yeah, you're kind of right, Mark. And I would be shocked if they let XRP go to 0. I think XRP is going to be kind of part of the plan to shift people to digital assets only, or like, tracking money, track tracing, databasing every purchase you make. But gosh, it's always a possibility. Yeah, and governments are developing their own CBDs. Time-based fibs. Yes, that's a time-based fib there. Yep. Okay. ETH scalp trade. Let's look at ETH real quick here. ETH. Now, yes, guys, ETH is coming into our support level, being that 786 and the pitchfork midline. So the thing with ETH, once we broke down, so this is the Coinbase. By the way, this is the Coinbase volume chart, and this is why I like Coinbase much better. It's a 4-year long range. It goes back to May of 2021. But look at, we broke down below the value area high. We bearishly backtested that value area high, which was in confluence with the bearish backtest of our pitchfork band that was holding as support. You can see that pitchfork band. It was holding as support here, and on the crash, we held it as support. But once you start to lose that pitchfork band, and you also formed a range for a couple of weeks inside your volume profile, you're finding acceptance back within your volume profile. Now, as far as pitchfork trading goes, we rejected from the top of the pitchfork, creating a distribution range at the top of the pitchfork. We distributed down. We tried to hold the upper band. We lost the upper band. We back tested it. Now you can expect to move down to the midline. So this is where pitchfork trading is so great. And now that we've moved down to the midline, we could absolutely start to form a little bit of a range down here. And scalp trades, yeah, you could be looking. Now, as far as the bigger time frame goes, I think we could wick to our golden pocket at 2,200. Now, here's the thing, guys. If you didn't know about log golden pockets, first of all, this move up from $1,400 to $5,000 is what? A 258% move. So if you're going to take a golden pocket from the lows of the impulse, or the lows of that push up to the highs of that push up, and you don't have it on log scale, you're at your golden pocket right now. So a lot of people are also going to be longing right now because it's your non-log golden pocket. You can see your non-log golden pocket's where we're at right now. And the value area high of your prior range, your prior 3-month long range, is right now. It's definitely a major support level. It's your 786 from this low to the high. It's a bunch, it's a nice support level where you would expect to at least form a little bit of a range, or at least expect to get a small bounce up from here. So yeah, scalp long opportunities are absolutely acceptable here. And if we zoom in onto the 4-hour time frame, yeah, we're bouncing from the 0.65 non-log golden pocket. And what I would be looking for is, now I'm not looking to try to catch a knife here, so I would want, and over the weekend, it's likely that we kind of form a range in here. You can pull the volume profile of that range that's forming, and when you're near the value area low of the range, you could look to long with putting your stop below that low, assuming that the low is in for the week and that we're going to kind of chop around in here. Now, do we have bull divs on the 4-hour? No. Do we have bull divs on NAMI? No. Money flow is starting to curve up, though. Do we have bull divs on the 2-hour? No. Yes, very slight bull divs on NAMI on the 2-hour. Money flow is about to cross over into the green. Do we have bull divs on the 1-hour? Yes, very slight bull divs on the 1-hour and bull divs on the 1-hour. So it's starting to look decent here. Now, what I would say is, let's now, let me delete this golden pocket. Let's look at this little kind of ascending channel that we're starting to form. So I'll zoom in on the 15-minute. And what we can look at is nice bull divs here. Money flow starting to come up. Bull divs here. Money flow is crossing into the green. You're going to pull an ascending channel here. And this is your channel that you're kind of chopping in. So you had a deviation in the channel. You're back inside of it. So it's likely that we do continue at least to take out this high at 2,800. And I would even look at pulling. You could form a range in here over the weekend. So what you could do then is pull your Fibonacci from that low, or that high, excuse me, to the low. And you can just turn on your non-log golden pocket and look at your non-log golden pocket actually has already been hit. That's where you rejected from earlier today. But we could come up and double top that, or we could come up to the 786, which is going to be near the top of the channel. Ah, man. You could even come up to take out those highs. You could continue to grind slowly. And let me just check one thing. Let's adjust this channel. Yeah, actually, I like this channel better here, because you can see the top is respected twice. The bottom, obviously, we formed the bottom off the 2 pivots, but you could just continue to grind up in this channel until you come up really over the weekend and take out these highs over the weekend into the top of that channel. We do have some 15-minute bull divs. So at 2,900, you might continue to chop in something like this. Rejection, boom, come up to the top, take that liquidity, and then lose it. But that's what I would be. You could look for a scalp. Now, you have 15-minute, 1-hour, and slight 2-hour bull divs on NAMI. To me, and we are going into the weekend, so it's going to range. We're going to be rangy. So if you come down to the bottom of the channel and you have continued bull divs, you might be able to long that a little bit. Okay. Clogs. Okay, Friday night working overtime. Okay. No, Mark, you canceled your Tinder date again? Looks like we're going to have to go out again. Okay, speaking of that, guys, it is, I do got to get going soon. Let's check Bitcoin real quick. Yeah, I don't know if I'd call this a pump, but we might break this kind of symmetrical or ascending triangle up. You can see we have this ascending triangle here. And if we break it to the upside, you saw your kind of deviation here. You're back inside of it. So now we're likely to at least come take out these highs, but you could pull, of course, this is pattern trading. So this is, coming up to take out those highs, maybe even coming up to your VWAP close from yesterday. 89K. So the breakout, the target of this ascending triangle is also going to be the top of our pitchfork band. Let's just pull it on this one to show you that. pretty much the top of the pitchfork band up there. That's also the back test of your bearish pitchfork. Let me pull that bearish pitchfork for you real quick. Oh, it's going to be different on Bybit because of that low is at 101K instead of 103K. But if we look at, so I guess if we put this at 103K and it was over here also, I mean, I would have to pull that on Coinbase. Let's do that. So look at where you're pretty much at the same spot. The breakout to back test, this bearishly back test, 89 to 90K, and then you come down. But it looks like we're coming at least for these highs right now. Watch for a liquidity grab of this. If you grab the liquidity and you start to dump, I mean, yeah. All right. Anyways, guys, I'm going to get going. Thank you all so much for being here. Mods, I appreciate all of you so much. Samuel, welcome in, man. It's so good to see you. Sudeep, Mark Dutch, Samuel S, R Pink, Andy, thank you guys so much for being here. Much love to you all. Appreciate you all. Thank you everyone for your support. Please hit the like button on the way out, and I will see you next week. Let's hope that we get some good trades next week. And like 78K. Remember, I'm looking for 78K. Thank you guys for everything. Yeah, turn on notifications. Mondays and Wednesdays, I do my video around market close. Tuesdays, Thursdays, Fridays, I will live stream 2 p.m. Eastern Standard Time. And if you guys want to join the Telegram, you can always pop in and ask me questions. If you do ask me a question in the Telegram, tag me so I see it, because sometimes I don't see it if you don't tag me. So thank you guys for everything. Have a good weekend. Trade safe. Also enjoy your weekend. Make sure to spend some time away from the charts. And